Good morning, everybody. It is Wednesday, April 17th, 8:46 a.m. Thank you, everybody, for being here on another Market Open. We are here today. Very exciting day as I woke up. I woke up at around 4:30-ish a.m. today, started getting ready for the day, and by about 7 a.m., we had some pretty exciting news break this morning. The biggest news of the day, Tesla has officially issued a shareholder vote for Elon Musk's new compensation package. That package will equivocate to $47 billion, and Tesla shareholders will be asked to vote on if they should move the company from Delaware to Texas. So that's the big news of the morning. We got to discuss that, the implications of that, what that means on Tesla stock. Tesla stock right now actually up in the pre-markets. The stock is holding up well, even though it's been a tough couple of weeks, really a couple months for the stock. Right now at about 158 in the pre-market. So we're going to be talking about that. Number two, Jay Powell spoke yesterday. I don't know how to make sense about why the market is up in the pre-market. S&P 500 right now, it's quite incredible, and I don't really have the best answer to it. S&P is green. The S&P 500, based on what the bond market is telling us, based on what oil prices are telling us, which are slightly down this morning, which is good, and based on what Jay Powell himself told us yesterday, I objectively, and I've been a very big bull for the past 4 months, I would say the market should be down. And the fact that we're rallying signals either a dislocation between how the market is thinking of equity prices, multiples, and what the Fed is saying, or the market is priced in inflation is going to die and it's just going to take a few months. And so they don't care about inflation. They're looking forward to something else. And we're going to talk about that and the implications of what that means later on today as well. Bitcoin struggling. Got some more news on Bitcoin, some analysis on the halving that I think we haven't done before on this channel. So we'll be talking about that. Palantir and Google employees have protested the office of Thomas Kurian, who's the CEO of Google Cloud. And their argument is that they are providing $1.2 billion of military cloud infrastructure to the Israeli army. And they are not leaving that office until Google stops providing that cloud infrastructure. So we're going to be talking about that and the implications about that, what that means in the context of Palantir. We got a lot to talk about, a lot to get through. Thank you, everybody, for being here. Let's get into it. Rick, Brent, Midwest, Victor, Darkstar, thank you all for being here. Gerald, Missy, Shannon, Nick Piercy, Brad, Walt, Yeti, Colorblind Collector, John Stevens, what's up, Alex, Others Inc., Mr. Seymour Duck, Nolan, James Velez, Mikesh, Emmanuel, Tata, Tony, Sanjay, Harvey, thank you all for being here this morning. I think we'll start off with the biggest news of the day. We got to start off with the biggest news of the day, which is Tesla. Then we'll move on to Jay Powell after that, but we'll start with Tesla first. So what's going on in the world of Tesla? Tesla has told their shareholders, and let me know in the chat if you will be voting yes or no. I have decided after a very conscious level of deliberation, it really took me a decent amount of time this morning to think it through, but I've come to the conclusion that I will be voting yes, even though it took me like 0.3 milliseconds to decide I'd be voting yes, to give Elon Musk $47 billion. Now, he was given $59 billion back in 2018 when the company was worth $50 billion. To give people some context, that company went from $50 billion to its peak, $1 trillion. Elon pulled it off. Right now, it's still worth $500 billion. So you're talking about a 10x from when he got the compensation package. No one, and when I mean no one, I mean even the most uber of Tesla bulls did not expect Elon to pull that off. He ended up pulling it off, and that is why he got the $55 or $59 billion compensation package. That compensation package, because of, it gets really technical, but because there were not independent board directors and the Delaware judge felt like that was like not a ethical thing, they struck down that package. Tesla has made a new package worth about $12 billion less, still a decent amount of money, but $12 billion less. It is reported that Elon made $0 in 2023. His compensation was zero in terms of actual salary. So this package would be making up for the past 5 years and for a year in 2023 where he made $0. Shareholders will also be asked to vote on changing the company's incorporation from Delaware to Texas. One of their main factories, Giga Texas, is in Texas. So the idea on the Tesla part is, hey, let's just leave Delaware. This court really doesn't understand the ethos of our company anymore. We want to embrace a place that really cares about companies and is more friendly to the freedoms that companies should have in the United States. And that is Tesla. So this vote will happen on June 13th. So we have about 3 months to make a decision. I would love to know what the chat thinks. Would you say yes or no? From the people I asked on Twitter today, most people said yes. I mean, most people weren't opposed to it. I think I got like 1 or 2 no's. And based on what I see in the chat right now, it seems like most people would say yes. There's like a couple people that would say no. I think, look, at the end of the day, yes, the stock has suffered 30% down over the past 4 months, year to date. It's been bad, but the guy took the company from 50 billion to 500 billion. I mean, if that's not worth 47 billion in compensation, by the way, all through stock, not just cash, I don't know what is, right? And so from that perspective, I do think Elon deserves this money. And we're going to see if voters vote for it. I would expect, at least last time it was 73% of the vote, I would expect about 75% or higher of the shareholders to vote for this and get the job done. Here is a lawyer on CNBC today. She has a little bit of a different opinion. Let's hear from her perspective, and then we'll keep moving on from there.
That's the kind of thing that, yeah, absolutely, shareholders can ratify.
Do you not believe that he should be paid at all for the last 5 years?
I believe that he was paid in the fact that he owns something like 10% of Tesla, which means that, I mean, this was part of the decision, so that every time he increased Tesla's value, he was motivated to do so. I mean, people like Mark Zuckerberg don't take a salary, and that's why.
But here's the thing that I don't understand. Clearly you have a view that he should not be paid for the last 5 years. That's what you just said, correct?
He has been very well compensated. And in the fact that
you don't believe that there should have been any
shares.
compensation plan starting in 2018 for him at all?
I think that I'm not making a judgment about that. My judgment is, all I'm saying is that he absolutely was compensated in the sense that he
Okay, but I'm asking a different question. Do you believe a judge should be able to determine whether a board or a company compensates an individual, decides to compensate an individual, whether you think the amount of, this is the issue, because whether you think the amount of money is too much or too little or waste or this or that, to me, that I don't understand. I think there's a fair argument, at least, I mean, you could make it, I don't necessarily think I'd agree with it, around the disclosure issues, right? There's a disclosure issue. If you don't feel like the process was disclosed properly, that's one thing. The question is, should a judge in any state be responsible for determining how pay is decided?
The way this unfolded in Tesla, and I think that this is appropriate, is that normally it is not the judge's decision, absolutely. And I think that every Delaware judge would agree, including McCormick. It's not the judge's decision, it's the decision of the board and decision of shareholders. The court only steps in when it believes that those entities were functionally disabled in many ways from making the decision.
But why would they be disabled now? How are they disabled now if they know everything about this?
Now, but that's, well, the problem, again, is that this is not a compensation decision anymore. As long as it's framed as paying him for work he already did, it's not payment. It's not compensation for his future earnings, and that's legally very possibly a difference.
Okay. Again, I think this woman is not necessarily correct here. I know she's a law professor and all that, but at the end of the day, her argument is he's already been compensated because he has a lot of stock. That is a subjective decision or a subjective statement that she's putting out there, right? That he already has a lot of stock. I mean, a lot already makes it subjective. Is 10% a lot, 20% a lot, 14% a lot, 5% a lot? That can't really be objectively determined from a lawyer's perspective, in my opinion. What should be objective is if there was a hindrance in the process of being able to vote on that compensation package in 2018. The Delaware judge said objectively, yes, there was an unethical situation around the board directors not being independent. Therefore, they were able to not legally check if 59 billion was too much. You could say that a lot of that is just like nonsense, but nonetheless, they made that ruling. For her to say 47 billion is too much and he shouldn't be compensated over the past 5 years when he already did have a compensation plan, but then the judge struck that down, to me is just a statement of how she feels, how much the money is, not a statement of does someone deserve to be compensated or not. You could say, someone had a high salary, like a CEO has a high salary, but do they deserve more stock if the stock has performed well? Tesla stock is up 900% in the past 5 years. 900% in the past 5 years. And if we're talking about objectivity here, if it was up, 10%, I think more people would be sympathetic to the fact that no, 47 billion is ridiculous. The guy took the company from 50 billion at 1.21 trillion. People did cash out at that time. They did make money. Now it's at 500 billion, still at 10x, to not give someone a compensation just because they already have a controlling stake of the company, which, by the way, it's their company. They should have a controlling stake in the company. That it doesn't make a lot of sense to me. It doesn't make a lot of sense to me. Benny says it's like making a bet with someone, losing the bet and not paying up. That's correct. So even if you have to readjust the terms of the bet, if you lost the bet, which is the bet was Elon was shareholders basically bet against Elon with this compensation package, right? They were like, yeah, we'll give you 50 billion in 2018, but the odds that you get this to 500 billion, probably not likely. the bet worked. And the fun thing about this bet is that shareholders got to share in the capital appreciation from this. And then they took away all of that compensation, even though Elon put in the work. So to me, it's like not paying up for your bet, which doesn't make a lot of sense here. And yes, it is 50% in the last 3 years, 100%. But in the last 5 years, it's up 9x. And so it's hard to argue with that he does not deserve some level of compensation from that perspective. Fimo says, what's Amit's compensation plan when he reaches 1 million subscribers? You guys showing up every single morning is more compensation than I could ever ask for. So thank you, everybody, for being here today. Now, on top of the compensation plan, which, again, I think is going to be approved, we'll see what happens. Some lawyers out there will have some headlines saying that Elon doesn't deserve it. I think a majority of Tesla shareholders are going to vote for this, especially because then Elon can be more focused because he has the money that he deserves, right? Everyone feels a little bit better when they know they're paid. This happened yesterday. Okay, I've been saying for the past couple of days that, look, Elon's liking tweets. 2 days ago, he liked a tweet called from Chris Zhang, who said, today, Elon decided to bet the entire company on Robotaxi. He liked the tweet. My headline story yesterday in the Morning Open was, guys, he liked the tweet. He's betting the company on Robotaxi. Most people agreed. Some people said it's a stretch. He responded yesterday to someone who said, Elon is betting the company on autonomy. Has he lost his mind? What do you expect from a guy who bet his car company on electrification in 2003? Elon's response, not quite betting the company, but going balls to the wall for autonomy is the blindingly obvious move. Anything else is like variations on a horse carriage. So given the second part of the first sentence, going balls to the wall, which is a incredibly explicit analogy that Elon is using there, I think it basically cancels out his first part of the sentence, which is not quite betting the company. It's like, no, Elon, if you're going balls to the wall for autonomy and you say everything else, including, by the way, the $25,000 car, is like variations on a horse carriage, he is calling traditional cars right now horse carriages, traditional in the fact of like, if you have to actually drive it with a steering wheel. That is a very obvious description that he is betting the company on Robotaxi. So if you are a Tesla shareholder, if you believe in this company, it is time for Robotaxis or bust. That's it. It is Robotaxi or bust. Either he pulls this off and it's the greatest AI story probably of the next decade, or it takes a lot of time for this to happen, and maybe Tesla stock is dead money for the next couple of years. And shareholders have to withstand all of that, which is, I think, something shareholders are going to think about with this $47 billion compensation package, because maybe they're like, hey, we're giving them too much money for a stock that's going to be dead, which means in the next 8 years, maybe it's not going to CAGR 10x like it has over the 5 years. Maybe it'll CAGR like 20%, which is still a really good return. But at the end of the day, I think the package will get approved. It's either Robotaxis or bust at this point. It is Robotaxis or not. And I think Elon, that you're getting it straight from the horse's mouth. He is saying we're going balls to the wall, which means on earnings, I wonder if Elon's going to keep that same energy. If you're just joining, Elon got a compensation package today for $47 billion. It is not given yet. It is for approval on June 13th by Tesla shareholders. And he tweeted last night, we are going, quote unquote, balls to the wall when it comes to autonomy, which means Robotaxis. So I expect a new phase for Tesla. I think that's why Rohan and Drew left. I think the senior execs a couple days ago, they did not agree with this decision. And look, if I had to pick between them and Elon, I'd pick Elon. I'd bet on Elon over the C-suite executives. But it will be interesting over the next coming years. How does he pull this off? How fast does FSD become? $99 subscription. Does that increase the take rate? But it's happening. It is time for self-driving vehicles. And now it's just a question of how quick can he actually pull that off. What about the bot? Now, I do think Elon did tweet under yesterday as well. It's good you bring up the bot, Benny. Jim, I'm forgetting his last name, but I think his last name is like Jim Fine. Dr. Jim Fine. He's a senior researcher at NVIDIA in their robotics division. He tweeted yesterday, the supply of humanoid robotics will be greater than the supply of iPhones over the next decade. So by 2034. So Elon responded underneath that post, yeah. So Elon has not responded about the bot in a very long time. I mean, for the past couple of weeks, he's only been talking about Robotaxis. The fact that he responded under a post specifically about the bot and said, yeah, this is going to outpace the iPhone, means that it seems like he's bullish. Maybe Tesla's working on it in the behind the scenes. And maybe also that's another reason he doesn't care about laying off people and the M2 vehicle, because he knows the future is Robotaxis and the bot. And quite frankly, that's a way better future than another $25,000 car. I think a majority of people in the chat, maybe they wouldn't like that for the stock in the short term, but for the long term, do we really need another $25,000 car, or do we need Optimus and Robotaxis? And it seems like Elon's deciding, you know what, fuck this, we're going for the big ones this time. And so we're going to see what happens. But right now, that is the current state of Tesla. And also this $47 billion compensation package is up for votes on June 13th. I think it'll get approved. And if it does get approved, it's going to be really good for Tesla. We'll talk more about Tesla after the bell. Let's move on to the macro. Jay Powell talked yesterday. Here's 1 minute on what he said on inflation. And if you watch this, maybe you'll understand why I'm so confused that the market's up in the pre-markets right now.
First declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3 and 6 month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken.
Okay, so that to me, what Jay Powell just said is like, hey, inflation is still an issue and it's not going away. Now, he did say at the end, however, we believe that monetary policy is tight enough to be able to get inflation to our target. Their target has been 2% for a very long time. The problem is what he said right there pretty much indicates we are not going to get a rate cut anytime soon. Like, I don't know how much more clear he could have been. We are not getting a rate cut anytime soon. We'll talk about ASML earnings. I have that on the dock. We'll talk about that in a second. That one was also very surprising to me this morning when I read it. But in the context of inflation, it was incredibly interesting, his comments that he said. Now, the 10-year right now is down a little bit, 4.635 on the 10-year. We were at basically 4.7 yesterday. So that's nice to see the 10-year come down. And oil prices are down about 0.5%. We'll talk more about Israel and Iran in a second. Israel is trying to figure out how they're going to strategically attack Iran over the coming days. They're saying they're going to launch an attack. I think the market's kind of just like, all right, fine, whatever, we'll deal with it. But right now, oil prices are trending a little down, which is good to see, below that $90 that we saw yesterday. At one point, it got to like $91, which was getting up there. So having said that, if oil is still at $89, if the 10 years at 4.6, and if Jay Powell quite literally says, we do not feel that the recent data suggests that our target of inflation is on the correct trajectory, these are his words, why the hell is the market up right now? I saw this last night when we looked at the futures, and the futures made no sense to me. I was like, this just doesn't make any sense. Even after Jay Powell spoke, it was funny because he was at some Canadian panel, and the Canadian guy started speaking, right, about the Canadian economy. By the way, we got to talk about Canada. They had some interesting stuff happen yesterday. The dude who started to speak, market was pumping. We went from 502 to 505 on the S&P. And the whole chat, whoever was there, that was like, let's let the Canadians keep talking, dude. For some reason, the market likes maple syrup right now. And when I mean in milliseconds, Jay Powell took the mic, we went from 505 to 502 on the S&P. Like, we literally declined 0.3% when Jay Powell started talking. It was hilarious. But then after Jay Powell was done, the market started to go higher. So why is the market up right now? Why is Nvidia up 1%? Why is the S&P up almost 0.5% right now in the pre-market? Even Tesla up 0.76%. I mean, like, this is really interesting to see why this is happening. My argument and my logic for this, QQQ as well, I believe, is up a little bit right here. Yeah, QQQ up 0.4%. My argument is I think the market is pricing in bad inflation data and moving on to Q1 earnings. And if Q1 earnings do not do well, it's going to be a rough next few months, because if Netflix, Amazon, Microsoft don't crush it, the market will have zero catalyst to be excited about besides rate cuts, and rate cuts are not coming in my opinion, now until September, if that, because inflation is sticky. Maybe it goes away by June, July, or at least starts to get back down below that 3.1, 3.2 level, which even that's going to be hard to get to at this point. But I don't know if we see inflation at 2.9 anytime soon. Hopefully like 2.7-ish by the end of the year, and then maybe we would get one rate cut right before that. Until then, there is no catalyst. And so I think the market is trying to figure out what is the catalyst. Well, if inflation really is going to stay here, and that means 5.5% interest rates are not leaving, either we put our money in a money market fund and we collect that 5% from the money markets because of the federal funds rate, or we bet on companies and their earnings. What that means is not betting on the entire market itself, i.e. the indices, but rather betting on individual companies. And I think that is why we're seeing some momentum in the market, because maybe investors are realizing, hey, let's bet on individual companies that are actually going to perform versus betting on the market. And that's why some individual companies are starting to do well. Benny says he thinks the market will sell off as soon as it opens. We'll see. Koenig says, admit we are in a bull market. I agree. We are definitely in a bull market, but the inflation news we got yesterday, at least given how much we react to every syllable Jay Powell says, it is astonishing to me that the market is continuing to rally, even though we had Jay Powell say what he was going to say, even though we're in a bull market. June says the market is going to steadily decline for a while with blue props here and there, a stock picker's market. Yeah, I agree. I think it is indeed a stock picker's market. People will have to pick certain stocks that perform well, but the broader market, again, and I'm bullish, I don't think we should be up right now based on what Jay Powell said. I don't know what the market is pricing in besides Q1 earnings, which, again, if you're pricing in Q1 earnings, you have to be pricing NVIDIA, Microsoft, Amazon, right? Those individual companies might be up. I know those companies make up a decent amount of the S&P, but I wouldn't imagine the entire S&P to be doing well. Is IWM up right now? Let's see the Russell. Is IWM up? That's up as well. Like, small caps should not be up right now, dude. Like, I don't know. Someone tell me in the chat, why do you think small caps should be up? Small caps are filled. The Russell is filled with unprofitable, quite frankly, shitty companies. The only reason they should be up is if a rate cut is coming soon. All of them depend on the cost of capital to be able to finance their businesses because they're not profitable. So I don't know why the market's buying it. Outside of us just being in a bull market and the market feeling inflation is dead, which maybe the market's right about that, but I think it'll take some time for us to see the evidence before that is the case. So interesting to see how the market is turning out. Now, I'm not sad about it. I'm not short the market. You guys know me. I'm so fucking long this market. I barely have money to buy the dip. So I'm happy to see it. But I did expect the market to be down today, and the market is not down, which is nice to see. Avi right now is in Israel, so he's providing us some citizen journalism to the live stream. Avi, thank you so much for being here. He says a poll in the Times of Israel shows that 74% of Israelis oppose the counterstrike on Iran if it harms security alliances. Very interesting. I think that's the Biden administration's basic argument to Netanyahu as well. It's like, look, this is going to destabilize even more than we've already destabilized. Maybe let's not do this. It's going to be interesting to see how Israel's war cabinet responds and if they even care about that poll. 74% is a lot. There's a lot of people that do not want to attack Iran. So let's see. Let's see how that turns out as well. Thank you, Avi, for that news this morning as well. Okay, so that is the update on the macro. If you're just joining, stock market's up. In my opinion, stock market shouldn't be up based on what Jay Powell said, but the market is the market. I'm just one human being, and I'm happy the stock market is up. But given what Jay Powell said yesterday, I did not expect the market to continue to turn green. It seems like the market is saying we don't care about inflation. That'll be resolved. We're buying the bull run that is AI, and that is the tailwind and at this point, revolutionary momentum that is a once-in-a-lifetime opportunity. At least that's what the markets are acting like. And so that's why we got the S&P 500 up right now. It would not surprise me if we turn red later today, but right now we are green. Okay, let's talk about ASML. So ASML, for those that don't know, is a company in the semiconductor space, and they're a hardware servicing company for the different machines that are involved in the process of making semiconductors. So they are headquartered in the Netherlands. Fun fact, when I was in high school, we had a foreign exchange program with the Netherlands. And some of the kids there, they brought us the strudels, I think is what you call them, the Dutch waffles, the really sweet waffles. And that was the first time I had those. I was like, wow, these are amazing. But so that is the most kind of proxy or affiliation I have with the Dutch. I don't know that much about the Netherlands. I know Amsterdam is in Netherlands, and I know a lot of people smoke a lot of weed in Amsterdam. So outside of that, that's the most I know about the Netherlands. But this is a tech company that is headquartered in the Netherlands. Stroop waffles, that's what it's called. What did I call it? Strudel or something? A Stroop waffle? Okay, it's a less exciting name. But so ASML didn't have the best earnings. Okay, now this was quite surprising to me. They did $5.9 billion last quarter in orders. This was in Q4 2023. This quarter, I read this article at 4:30 this morning. I didn't even know their earnings were out, but because they're in the Netherlands, they were, the time difference meant that the earnings were out. This quarter, they did $700 million. They are down 60% quarter over quarter in the context of earnings. I mean, look at that decline right there. That is pretty damn aggressive. So their order intake dropped 60% in the first quarter. What that means, and what the CEO basically said, is that 2024 seems to be a recovery year for their part of the industry. That's not the semiconductor space in general. but that's their part of the industry, which is making equipment needed to service the advanced chips from a TSM and AMD and NVIDIA, et cetera, et cetera. And they expect demand to increase in 2025. Now, having said that, they don't expect their full year 2024 outlook to change by the end of 2024. This is just a 1 week quarter, and they say the latter half of 2024, so starting from Q3 to Q4 is going to be fine. But it was a little concerning because I wondered if NVIDIA, AMD, SMCI, or any of the other big semi names would be perceived as having a demand issue if ASML is having a demand issue. Now, if you look at their stocks in the pre-market, that is not the case for what's going on. ASML is doing not the best. I think it's down, let's see, down 4% right now. ASML, yeah, down about 4.6%. So it's down about 45 points right now in the pre-markets. It was up 2% yesterday. SMCI, NVIDIA, these guys are doing fine. NVIDIA is up 0.95%. SMCI, it was up 10% yesterday. SMCI is up another 2% in the pre-market. Why was SMCI up 10% yesterday? No big news outside of Loop Capital, which is one of these Wall Street firms, upgrading them to $1,500 a share. I didn't even think Loop Capital, no disrespect to these guys, I didn't think they mattered that much. They're not a Goldman, they're not a JP Morgan, they're not a Bank of America. They're Loop Capital, right? I was like, okay, that's fine. But like that price target really got the street excited. And this, I guess they gave a very compelling report in terms of what they think full year revenues could look like, which by 2026, they're looking at like 60 billion in revenue. Right now, I think they're doing 50 billion. So they would CAGR 50% over the next 3 years, which is pretty phenomenal in the context of a hardware company. And so SMCI is up right now. And then AMD, I think AMD is down a little bit right now. No, AMD is up in the pre-markets as well. So ASML's decline in demand for this quarter, that it does not seem to be a trend for the full year, is not affecting the other semi companies, which is good because I had a little fear that would happen in the pre-markets, which means if AMD, SMCI, and NVIDIA crush their earnings, they should be fine. The semiconductor entire part of the economy should be fine, even if just one company, ASML, is not necessarily doing the best right now. And so that's what's happening right now in the context of ASML. And it wasn't the worst earnings, but it also wasn't the best earnings for that company here today. Okay, cool. So that's what we got on ASML. Let's move on to Google and Palantir. Now, this is a juicy, juicy story. Every Palantir shareholder should be kind of licking their lips at this story. I saw this last night, and this was just absolutely hilarious to see because it is what it is. I'm going to do a video today on Daily Palantir talking about if Palantir wants war. I was inspired, and I'll tell you guys why I was inspired to make this video later today. I think it's gonna be a good video. It's talking about the relationship between the military-industrial complex, a company like Palantir, which is a defense contractor inside of that world, and then the actual necessity to protect and defend Western values, given all the geopolitical crises we've seen over the past basically 18 months. So this is what happened yesterday. Google employees are protesting the company for their work with the Israeli government. Their demand is to abandon the $1.2 billion cloud contract that Google has with the Israeli military. Now, look, 1.2 billion bucks is not that much money for Google at the end of the day. Look, it's a lot of money, but I don't think if they wanted to cancel that contract, would it put a little dent in their earnings? Maybe, right? Given like that 1.2 billion, I don't even know how many years it's for. So if you amortize it over like 5-10 years, it's really a small bump in their earnings, if anything. If they wanted to, they could do this. I don't think Google wants to abandon the Israeli military during this time. I think some employees in Google want them to do that. I don't think Google, the company, wants them to do that. Right here, you can see these protesters. They stood in front of the offices in Sunnyvale, California, and in the actual office of CEO Thomas Kurian, who is the CEO of Google Cloud's division. And their argument is, we are Googlers against genocide, and we should stop providing funding stop providing cloud infrastructure to the Israeli military that is using that funding or using the cloud infrastructure to do bad things. Now, Palantir has had employees protest in the past, but from what we've seen publicly, there have been no mass protests internally due to Palantir's very explicit support of Israel. Alex Karp has went so far as to say, hey, if you don't care, like, leave, right? We don't really care. I am interested in what Google is going to say in response to this now. Are they going to cancel their contract, or are they going to fire these employees? Here's Karp talking about this about 3 years ago and what he said on this very subject around Silicon Valley and the moral position that a company should have on their products.
The core issue, though, is who decides. And to the people who want to reduce the complexity, it's commonly known that our software is used in operational contexts at work. Do you really think the warfighter is going to trust a software company that pulls the plug because something becomes controversial with their life? Currently, when you're a warfighter, your life depends on your software. They will never trust you if you pull the plug just because you're unpopular. The core issue, though, is who decides. And let me, to the people.
So Karp right there is basically saying, hey, like, you cannot be a software company that provides software, especially to a government. And then as soon as there is a political disagreement with how that government is operating, you immediately decide to pull your software. That government will never trust you again. The broader private sector is going to have a hard time trusting you. And it's going to be very difficult at that point for a company to be able to do business. Now, we saw the Project Maven contract back in 2021, which I believe was a $240 million contract. This was for autonomous drone targeting, which now is not even that crazy of a deal given how AI has exploded. But back in 2022, when AI really wasn't a mainstream thing, Google was given that contract by the DoD. They rejected it because there were some employees that morning that didn't get their Starbucks on time. By the way, Starbucks supports Israel as well. So I wonder how many of these employees that were protesting Google yesterday had Starbucks in the morning, because that would just be a beautiful thing to see. They didn't get their Starbucks that time in the morning in 2022. Their vanilla iced latte came in a little bit hot. And as a result of that, they decided to protest against Google. And Google got so scared that these people that didn't get their vanilla iced lattes on time would leave the company, that they got rid of the contract. They gave the contract back to the DoD, and then Palantir swooped in and said, we will take those $250 million. Now Project Maven is a pivotal part, and we're seeing extensions of that partnership being given to Palantir over the past couple of years because of how important autonomous drone targeting it is. So what's going to be really interesting to me is, and I think some reports have come out that Google has already fired those employees, but how is Google going to publicly respond, right? I think Sundar Pichai has to make a statement. I don't think the press, the PR team at Google can just say, oh, this was an incident, we took care of it, we moved on. By the way, when people were protesting Karp for the immigration work they were doing with ICE back in 2017, when Trump was president, and there was a lot of controversy going on around that time, Karp made a public statement, and he told the employees, hey, if you don't like it, get the fuck out. I mean, like, it was pretty explicit. I don't think Sundar will be that explicit, but I am curious, will he respond? Will he actually make an argument in the context of what happened, and how is he going to be able to justify his support for Israel without potentially pissing off all these Google employees? It's going to be really interesting to see how that plays out. Having said that, the All In podcast, there's a 1-minute clip I want to show you guys. This clip was going viral last night on Twitter. They talked about the concept of investing in defense tech startups. Palantir at one point was a defense tech startup. And I want to listen to this clip and then talk a little bit more about what it means for the investment thesis in Palantir overall.
I don't have a problem with investing in a company like Anduril. America needs defense companies in order to maintain its defense. And the problem right now that we have is there's these 5 prime companies that are antiquated and really expensive, and we need startup disruptors to that. So I'm not morally opposed to it. In fact, I think it's probably a good thing. I think my concern would be, I don't really want to be part of the military industrial complex. I feel like it might corrupt my views on things.
No, you'd want war. You'd be girding for war. That's your demand gen.
Right. I don't want to feel an incentive to be like these generals who go on CNN and Fox News and justify every single war.
That's my biggest fear as well. It's one thing to be investing in a bunch of companies where we're sitting around hoping for cheaper clicks on Facebook and Google. It's an entirely other thing to sit on the board of a company and hope for war. That's a horrible place to be. If you believe that America should be the most important country in the world, and you have the ability to help it be that, eventually some of those decisions will come in contact with this kind of decision.
I don't have a
So I want to give my quick thoughts on this. I'm going to talk more about this on Daily Palantir, but I thought it was an interesting subject to bring up given the news. That's what's happening, with Google and these protests. And I've said this since I started covering Palantir back in 2021, because this question kept coming up often in those early days when I was covering the company and I had invested. And a lot of people were like, how could you invest in this war mongering company that just wants a war so they can make money? And in my head, I was like, look, if I was like 15 years old, I would think like that. But I would like to think I've gotten more mature. And my maturity has allowed me to realize I do not think Alex Karp is banging on the table saying, let's have some war, baby. Let's sell some products. I think Karp, which in January 2022, if we saw the Stanford, pretty sure everyone here saw the Stanford Kevin Warsh interview, it was almost prophetic the way Karp was talking. He said, look, the values that have defined Western democracy, which is freedom, you can express yourself, you can be Christian, Muslim, you can be gay, straight, like you can have these beliefs about yourself. And for the most part, you are okay. You are not going to be, thrown in a dungeon for believing. You can say, I hate Trump, I hate Biden, and someone's not going to come and kill you. Those values are sacred and they're uniquely based in the West. Those values we had to fight for, and there's parts of the world that don't want those values to exist, i.e. Russia and China. 1 month later, after that interview, Russia invades Ukraine. And so I'm sure there's more to it, and we can go down the whole rabbit hole, but I think Karp's entire argument has been, and Palantir's argument has been, we don't want a war. I don't think Anduril wants a war. I think their argument is, if we build defense tech, we are deterring a potential war. Same thing with nuclear weapons. When you have nuclear weapons, you're not building them to throw at another country. Like, the ramifications of throwing it at another country. Things, a lot of people die. You're building them so other countries don't fuck with you. And that's the kind of concept around it. So is there a world in which the military industrial complex has persuaded the United States government to go into war and further prolong a war in order to make money? I think the Iraq war is definitely an example of that. I think that has happened in the past. The idea that we want China to invade Taiwan so that we can get into Taiwan and then sell our products to protect them is asinine to me. If China were to invade Taiwan, America's economy would flip overnight. One company would determine everything. TSMC. I mean, if that got invaded, like, the whole economy is like flipped upside down overnight. So from that perspective, we need defense technology to stop China from invading Taiwan. Or if we don't believe China's values align with Western values and that they are going to do it, are we going to sit back and just let them do it? Or are we going to build technology before they do it, i.e. Palantir software, Anduril software, etc., in order to stop that from happening? So from my perspective, I'll go deeper on it later on Daily Palantir. I do think that investing in defense tech is investing in a future that protects these Western values that have been under attack all over the world. I mean, to put a final comment on this, we have people in America who are saying America is the worst country in the world and that we should adopt values from the CCP and that we should be more like some of these Middle Eastern nations that don't really value as much of the freedoms America values. I mean, when you have those internal problems inside your own country, there's definitely things happening externally. And I do think there is value to a company like Palantir trying to protect against that. So we'll see what happens from there. But in the context of Google, I'm looking forward to Sundar Pichai's statement on this, because I think he's going to have to make a statement after a protest like this happens. I don't think there's a way they ignore what's happening right now. Thank you for the $10 super chat, Peter Girardi. He says Google would rather bow down to toxic woke ideology within their workforce due to versus defending Western values. When it comes to it, Palantir doesn't care about wokeness; they care about the West. Yeah, I agree. And look, that's my investment thesis in a nutshell. I think outside of the commercial part of the business, which I think is going to explode in Q1, and we'll talk more about that later, I think at the end of the day, you're investing in a company that actually cares about protecting these values. And whether you like it or not, they don't sugarcoat it. And that's the good thing about Palantir as well. Like, you can either, what you're getting. Either you're getting a guy you don't agree with, don't invest. Or you're getting someone you do agree with, you support them. With Google, Microsoft, Amazon, these guys speak up kind of when it's important, like other times they don't speak up. So the Israel stuff, they don't want to speak up. When it comes to Black Lives Matters or trans rights, they do want to speak up. And that type of dichotomy, this sort of performative activism is what Palantir has criticized for so long in the Valley. And that's what we're seeing right now. One last thing on the defense tech stuff when it comes to Palantir. Andreessen Horowitz, one of the largest venture capital funds in the United States of America, they just raised $7.2 billion to fund tech startups. So the startup ecosystem is alive and it is thriving, because if Andreessen Horowitz can raise almost $10 billion to put fresh money into the ecosystem, that is a good thing. They raised $600 million out of the $7.2 billion just for defense tech. So about 16% of that fund is just to invest in the next Palantir, the next Anduril, the next Lockheed, the next Raytheon, etc. So a lot more money is coming into this ecosystem. Why does that matter for Palantir? Because Palantir has a product called FedStart. All those companies that get funded by Andreessen, they're going to need to be able to sell to the government. In order to sell to the government, Palantir's FedStart product to me is the easiest way to get access to be able to even sell to the government. So I think a lot of that money will trickle in, hopefully, to Palantir over the next 5 years as well. Okay, cool. That is the updates we got in the world of Palantir. We got 5 minutes until the market opens. A couple of headlines I want to show you guys, and then we'll get into the market open. Thank you, everybody, for being with me here today. Let's pull up a couple of these headlines that I thought were interesting. So, number one is mortgage rates. They're at 7.5%. Mortgage rates are high. So this is the highest mortgage rates we've seen in 2024, 7.5% for a 30-year fixed mortgage rates. My parents, thankfully, got like a 3.25% mortgage rate back in December of 2020. Let me know in the chat if you guys locked in any mortgage rates. And my mom really made that happen. Like, my dad didn't want to buy a house. My mom really pushed him to buy this house. And the house that we're in right now it's because we really locked in a good rate. So 2020 was the time to buy. 2024, I don't know if it seems like the time to buy. Now, ironically, JP Morgan, and it's not just JP Morgan, but a lot of people came out over the past couple of days and said the Fed's high interest rates are deterring mortgage rates from coming down, and they're overall discouraging the increase of housing supply to go higher. We got the housing data yesterday, which was just atrocious. New home inventory is down month over month. The start of new home construction supply is down month over month, and the average price for a house is up month over month. So really, in the housing market, we are not seeing some good data. This is very bad when it comes to CPI. This, again, goes back to my confusion for why the markets are up right now, given this data that we're seeing, given oil prices that we're seeing, and given everything that Jay Powell said yesterday. I kind of don't think the market should be up, but markets are up right now. So that is one thing I wanted to bring to everyone's attention. That is definitely not the best thing that we're seeing right now. We got Harvey with a 2.5, Mark 2.49, Brandon 2.75, 15-year. Wow. You guys got some really good interest rates. You guys got some really, really phenomenal interest rates. That's not bad. Locked in 3% in 2019 for 2 properties. Not bad at all. Not bad at all. I love it. I love it. I love it. I love it. Michael Rosen says, Amit, have you been hitting the gym? You looked yoked. Thank you, Michael. Out of the 1,362 people here, you seem to be the only comment that was nice enough to give a little bit of a mention to look, I'm not a defense contractor, but your boy got some guns. You know what I'm saying? Your boy been working on some guns. So thank you, Michael, for being one out of 1,400 people to actually acknowledge it. It really means a lot to me. Yes, I have been going to the gym. But the problem is, dude, I think I want to stop working on my arms because I'm not working on my legs, if I'm being honest. Like, my legs are... So I don't want to be like the guy that's built at the top, but like is like scrawny at the bottom. So I think I need to like actually do leg days because I just never do leg days. So like, I really need to incorporate legs into this fucking workout. Otherwise, my arms are going to look ridiculous. What, guy, that was funny. Austin's putting the 3 dots as if that wasn't a good joke. That was a good joke. All right. We were talking about defense contractors, guns. Like that was good. You can't say that wasn't good. Okay. So that's what we got going on in the world of mortgage rates. We had LVMH earnings as well. The fashion company, the luxury fashion company, their sales were down, their sales rose 2% in the first quarter, which is not amazing, given 18% growth they had a year ago, but it's decent enough, to justify some share appreciation on that stock. That stock was up 3.6% in trading in the pre-market. The stock is still down 6% for the year. So if you bet on LVMH this year, you are kind of in like an Apple situation. Apple's down about 6% as well. However, their first quarter did show that Louis Vuitton, Hennessy, all those big brands that they buy, those brands have done well, at least in the first 90 days of 2024. Okay, here we go. We got 1 minute until the market opens. Let's pull this up and see what we got going on. Again, I'm going to be objective here. We'll talk about Robinhood in a second as well. We had some news on Robinhood yesterday. I don't think the market should be up right now. I'm happy the market's up. We'll see if it sells off today. I'm not trying to be a bear. I just think the data we've seen over the past couple of days, it really does seem like the market's being a little exuberant with giving the market some love here. But maybe we're just moving on into Q4 earnings or Q1 earnings, and the market just doesn't give a shit about inflation anymore, which I'm fine with. But as long as inflation comes down, that will support the market actually moving on and not caring about bad inflation numbers. And so we'll see how this turns out in about 10 seconds as the market opens. All right, here we go. Thank you, everybody, for being here. Wednesday, April 17th, 9:30 a.m. The stock market is now open. All right, market's open. S&P opens green. Wow, look at the right-hand side of my screen. We're seeing a ton of green. ASML is the only one that's red, down 4% on the day. If you're just joining, their earnings are down 60% quarter over quarter in terms of intake for sales growth for their machines that service high-level chips. That's why they're down. Not that crazy. You would think they're down more if they're showing 60% year-over-year growth, but their guidance wasn't that horrible. So that's why even the 60% decline doesn't have the stock down too much. 505 on the S&P, up 0.4%. AMD, up about 0.2%. SMCI, up 1%. NVIDIA, 1.2%. IWM, small caps are up today, 0.5%. MicroStrategy is down. Bitcoin's down. We'll talk more about Bitcoin in a second. Robinhood, again, we'll talk about why Robinhood is performing decently, even though Bitcoin is down 3% this morning, or 2.34%. It's really incredible to see this price action by Robinhood. I mean, quite frankly, it's pretty damn amazing to see the street actually give Robinhood the premium, even though Bitcoin's going down. So we'll talk about that in a second. United Health, they had great earnings yesterday. They're up another 3%. They were up 5% yesterday, so 8% in 2 days. This is a big company, $445 billion. Moving 8% is not easy, but they're moving up, which is not bad at all. Google, again, they had protests this week or yesterday, but they're up. Stock's up. So market doesn't care too much about the protest. Stock is up right now about 0.67%. Coinbase is up right now. Tesla 157, basically flat on the day, but that is green. Bank of America is green. They fell 3% yesterday. They had good earnings, but the street didn't like that they missed on revenue targets year over year. Their expectations they beat, but year over year they are down. So that's why the street tanked them about 4% yesterday. PayPal 63.68, SoFi 725. I was watching the Lakers game yesterday. I have not watched the basketball game in so long, but I watched the Lakers versus the Pelicans because it was a play-in tournament game sponsored by SoFi. For a couple things, I saw a ton of Robinhood ads in the middle of I haven't watched TV ads in a while, but I saw Robinhood ads, I saw SoFi ads, and the Lakers won. So, and I'm a semi-Lakers fan, so I'm happy. I'm a LeBron fan basically. But the thing is, it was interesting to see SoFi's logo on the arena, and I think 15 million people watched it. So hopefully some good brand awareness for SoFi. Palantir, 21.94. We were 22 in the pre-markets. Palantir did get some award this morning. It's not really really huge news. I'll pull it up in a second, but it's like some award they got. Nothing too crazy for the stock itself. But Palantir right here, 21.94. We were at 21.30 yesterday. Let me know in the chat if you bought any of the dip. I bought 5 shares at 21.76 because we cannot let Chris Patel win the bet on his puts that Palantir gets to 21 by July. So I'm holding the line. I'm trying my best. But I bought a little bit of a dip yesterday. CleanSpark right here, 14.53. Rocket Lab is up a little bit. Wow. Destiny Tech ETF down 26%. Holy crap. Destiny Tech ETF down 26%. One thing I will show you guys in a second after we look at some of these other stocks. ARK Invest has their own VC fund. They came for Destiny's neck yesterday. So they put out a thread on Twitter where they basically accused Destiny Tech's ETF of being like the worst ETF you could bet on. And they actually have a good point. So after we go through some of these stocks, I'm going to pull up that thread. It was very interesting, but because they have a competing VC fund, but their argument was like, hey, if you're going to buy these guys, you are overpaying so much. Like you should at least know about it. So right there, that's down 26% in the pre-market right now. Lockheed Martin is up a little bit. They got a $17 billion missile contract yesterday. The stock's not moving. So I guess the market doesn't care, which is ironic to me. That's almost 20% of the market cap. But that contract did not move the needle. DJT up 1%. They were down about 15% yesterday on news of more dilution. So the stock fell. Seems like maybe it could rebound given it's fallen so much over the past couple of days. The stock was at $70 a couple of weeks ago. Goldman Sachs is up a little bit, 2%. Wells Fargo is up. Citigroup is up. Netflix, they have earnings on Thursday. They are up. Apple back at 170. That's up. Snowflake 151. That's up. Snowflake fell under 150 yesterday. I think that dip got eaten up pretty aggressively, and we'll see if it falls back below 150. I think 150 below on Snowflake is definitely a good deal. At least in my perspective, for a trade, maybe not long term, but that one right now is at 151 in the as the market opened. Hims got downgraded yesterday as well. This stock fell from about 15-ish to 1272. So that one got downgraded yesterday. It's up right now. NEO's up 2%. Shopify's up 1.4%. JP Morgan's up about 0.4%. Celsius up 0.63. Celsius has fallen almost 15, or not 15, about like 9% over the past 2 weeks as well. Reddit, wow. Reddit's down 2%. Reddit's at $40. Reddit was at 46 for the longest. Reddit IPO'd at 34. So it's above its IPO price, but I mean, it was more healthily above its IPO price over the past couple of weeks. Google 155, Uber 74, Rivian. I'm curious who the hell is buying Rivian right now. Rivian's down at the lowest it's ever been. Remember, Rivian was a $150 stock at one point in 2021. Right now it's $8.80. It's trading below cash on hand, which theoretically signals a good deal in the market. But it also depends, is the company growing? Like when Robinhood was trading below cash, it was a good deal if you believe Robinhood would grow, and Robinhood has turn some things around. Rivian, if Tesla's suffering from EV demand, for those that are just joining, Elon got a new compensation package today for $47 billion that shareholders will have to vote on by June 13th. If Tesla's struggling with EV demand, I don't know if Rivian's necessarily going to be able to pick up on that demand as well. Where do we have with SMCI? SMCI is up 2%. NVIDIA is up about 1%. S&P is still holding on, man. S&P is up. S&P is doing what it needs to do. Robinhood falling a little bit right now. MicroStrategy is down. Google is down. Coinbase is down as well. And now Tesla, 155. It is down 1% on the day. SoFi, actually green 1%. And Palantir, 4 cents away from getting back to that $22 level. Meta below 500. And then Amazon here at 184 today as well. Bitcoin. Let's talk about Bitcoin and what's going on in the world of Bitcoin. So I found a chart last night that I thought was incredibly interesting in the context of what's going on with Bitcoin. Bitwise, one of the Bitcoin ETFs, they put out this chart. By the way, the Bitcoin ETF inflows are getting disgusting. I don't know why people aren't buying the ETFs. Probably because I'm not buying the ETF, so other people aren't buying it. But look at these inflows yesterday. BlackRock brought in 26 million. Fidelity brought in 1.4 million. ARK lost 13 million. And then Grayscale sold $79 million of Bitcoin. So the ETF inflows have dried up. I don't want to say they're gone yet, but they're definitely not at the momentum they should be for Bitcoin. Now, granted, the halving event is coming up, and this chart right here, which we haven't really shown on the channel before, this chart was posted yesterday. I thought this was an incredible chart to kind of describe what's going on right now in the context of the halving event. So on average, let's go to 2012. In 2012, 1 year before the halving, the stock went up 385%. 1 year after the halving, the stock went up 9,000%. 1 month after the halving, the stock went up 9%. 2016, 1 year before the halving, the stock was up 142%. 1 year after the halving, the stock went up 285%. 1 month after the halving, the stock was down 10%. And then the latest one, 2020, 1 year after 2020's halving, we had 548% price appreciation on Bitcoin. But 1 month, so about June in 2020, we were only up 6%. What this goes to show is likely a month after halving, so around May in 2024, Bitcoin, historically, if it follows, it's going to barely be up or probably be down, which means the miners are going to struggle. The ETFs are going to struggle. The Coinbases, the Robinhoods of the world are probably going to struggle if they're still sort of like really attached to Bitcoin. But a year after, historically, so by like call it February, March of 2025, on average, Bitcoin should be up about 300%. So if Bitcoin ends its kind of bear cycle 1 month after having call it around 40,000, 50,000, we should be up closer to that 300,000 or sorry, 150, 200,000 level in a year. Will that happen? I don't know. This is literally looking to history to kind of determine if that could happen. But if that does happen, that would be pretty exciting for Bitcoin. And it does kind of give you a little bit of a context of what the timing looks like, which is 1 month after, hold on for the horses. 1 year after, things might be good to go. And so we'll see how that plays out. Bitcoin right now struggling a lot. I mean, it's just not finding its footing right here. 62,000 can barely get back to that 70,000 level. It bottomed at 62,110 earlier today. Right now it's 62,600. And we'll see if it can continue to make a path forward. Ironically, the Bitcoin miners are up. CleanSpark's up. Coinbase is up. Robinhood's up, even though it's not a miner. MicroStrategy is up. I think it's because they bottomed out yesterday when Bitcoin was really down in the dumps, and now it's made some momentum from then. But it also feels like the market's buying the dip because they believe Bitcoin's going to go higher. Even if Bitcoin's not higher right now, they're ready to buy a CleanSpark 4% up on the day, even if Bitcoin isn't correlated with going to the positive side, which would make CleanSpark go higher on a daily basis that we see, because they're front running because they think Bitcoin after the halving event is going to go higher, which means that would be the bull case to buy something like a CleanSpark. And so we'll see. We'll see how that plays out. But that right now is the update we see in the context of Bitcoin. David here says Reddit is the worst social media platform. I've actually started to use Reddit a lot more to go nicher into different forums that I've been studying in the context of the options market. And there's a lot of good stuff. But I do agree, and we'll talk more. I did some option trades yesterday. I'll show that in a little bit. I do agree that it does get toxic. So I don't use it to socialize, but to find information, dude, it's been pretty damn good. It's been pretty good from what I've been using. The question is just, can they monetize that at scale? I don't even think I clicked on any ads when I was using Reddit yesterday. And so that's the hard part when it comes to Reddit, which is why I think the AI play to monetize is not the worst thing ever. I don't think that's the craziest thing. Okay, couple of other headlines. Let's show this. So we talked about the housing market. Housing right now is started the worst since the late 1990s. In theory, high US prices for houses should be stimulating a ton of new home construction, right? The logic here is that if a house costs, I'm just throwing out a number, $500,000 on average, then we need to get that price to come down. The only way to get that price to come down is if you have more supply. So you should build more houses to get people to not buy the $500,000 house, which they won't buy, especially at a 7.5% mortgage. They're going to buy a cheaper house, which means we need more supply. But it ain't happening. In fact, just released numbers that came out yesterday showed the biggest monthly drop since COVID hit in 2020. So the housing bust here around 2007, 2008, we saw new houses go down to about 500,000 every month when in 2006, 2007, they were at 1.4 million. if you can see that right here on the screen. And then in COVID, it dropped all the way down to just below 1 million. We spiked back up in May of 2022. And then since then, we haven't been able to really find our momentum right now when it comes to new houses. This is not good for inflation. We need more houses so that these mortgage rates can come down and so that people can, buy a house, because in order to buy a house, you need to have a reasonable price. The problem is the high interest rates are keeping the inability for new home construction companies to be able to aggressively start building, because the cost of financing to build a home is too high. And so that is why housing is such a interest rate sensitive industry that we're in a bit of a conundrum. JP Morgan yesterday said we need to lower rates just to stimulate the housing market. I don't think Jay Powell's going to buy that, which is why also I think the market should be a little down today, because given the housing data we saw, there's no reason the market should be super green, given this housing data suggests that if inflation is not coming down anytime soon, given that shelter is 50% of the CPI along with oil, shelter and oil are booming. Until that starts to cool down, we're not getting a rate cut. If we're not getting a rate cut, maybe the market's pricing in too many rate cuts right now, or maybe the market thinks Q1 earnings matters more and AI matters more than rate cuts. And I would be very happy if the market came to that conclusion, but I don't know for sure if the market has come to that conclusion yet. At least that's what JP Morgan said yesterday as well. Chris Patil says the problem is people are not selling. Well, that's also another argument as well, right? People aren't selling, and that is also leading the prices to, because yes, I mean, Chris has said this many times. If people sell, then they would have to go get a mortgage. Like if my parents sold their house right now, which I think our house has doubled over the past 4 years, or at least gone up like 60-70%. If we were to sell, we would have to just finance a new house at 7.5, maybe if we're lucky, 6.5% on the mortgage rate. So it wouldn't make any sense to sell either, which again goes back to this problem of supply. New construction companies aren't super incentivized to create supply, but also people are incentivized to sell their homes. And so the lack of supply right there is really hitting the housing market in a tough world. And I don't know if Jay Powell's going to be sympathetic to, if we cut rates, the housing market will do better. I just personally, I don't think he's going to be of that mindset, even if the market wants him to do that. Which means we're going to have to see how this housing situation ends up playing out. S&P right now at 505, ARK Innovation 4388, Meta at 500, Coinbase at 222. And we got Tesla here at 155.73. Tesla now down 1% on the day. Did anyone buy the Tesla dip over the past couple of days? Did anyone buy the Tesla, or not past couple of days, basically yesterday and today? Did anyone buy in the 150s? Very curious. I think a lot of people are a bit scared to buy right now. And I think it makes sense, because if we know that Q1 earnings is going to be a complete pivot to the robotaxi, which, let me just share this again for those that are just joining and weren't here in the beginning of the stream. Elon responded to a tweet yesterday, and the response to the tweet is as follows. We are going balls to the wall for autonomy. Everything else is like variations on a horse carriage. So when the CEO of the company says this is the pivot, I think we can objectively agree Reuters was not wrong at this point. Elon does not seem to care about the stupid $25,000 car. But the more I think about it, it is kind of stupid, quite frankly. Like, you're just going to increase volumes with crappy margins on a car that, yeah, it's going to be better than like a Honda Civic. But at the end of the day, it's not the AI sort of transformational vision that Tesla has been shipping and been convincing us for the past 10 years. I think robotaxis and the bot is the way to go. I think that is the investment thesis. I don't know how investors are going to interpret that come Q1 earnings. And if investors don't interpret that in the right way, if the Gary Blacks of the world, if the Dan Ives of the world are, and the Dan Ives has been very bullish, if he gets super bearish on this, then we're going to see some downside momentum on that stock. Maybe the bad news is baked in, but if it's not, then things can get a little ugly when it comes to Tesla. And so we'll see. We'll see how it plays out. Byron says, I'm buying under the $500 billion market cap. I'm going to buy 50 shares of Tesla today, John Stevens says. The fact that it's holding 155 also is incredible to me. I mean, you would think, given the bad news that has come out over the past few weeks, this thing would be back below 140 or at least below 150. It's holding up. It's holding up pretty damn well, in my opinion, even though it is down almost 40% year to date. Let's get an update on Tesla's compensation package. Again, if you're just joining, a new compensation package for $47 billion was not approved, but was suggested by the board of directors, and shareholders will have to vote on it in June 13th. Let's get an update on what that package means and why it would be good for Elon long-term.
Is now going to be going to shareholders, asking them to vote again on Elon Musk's multi-billion-dollar pay package that they had already granted back in 2018. but a Delaware court had voided that package about 3 months ago. Join us right now to talk about this on the Squawk Newsline, former SEC Chairman Jay Clayton, also a CNBC contributor. The appeal is going to happen in parallel. They're going to continue that, but it appears that such a vote, if in fact it was to vote in favor of it, Jay, would make any type of appeal moot. What do you make of this idea that they're basically going to attach the decision to the proxy and say, hey, we've just, if the judge didn't think we disclosed everything before, we've disclosed everything now?
Well, I think you've captured it exactly right, Andrew. Here we go back out to shareholders and we say, you have the facts, and now you have the benefit of all this hindsight. And if you vote in favor of the same package again, to me, and I'm speaking just very 30,000 foot level, it does obviate the need for the appeal. And look, appeal process, court process is fairly messy. And if you go to direct to shareholders and they have all the information, that seems to be a much more efficient way to deal with this. If in fact shareholders want to continue with this pay package. And what I'll note is, this is all part of, I would imagine, retention of Mr. Musk going forward as well.
And that's the big leverage point in this, which is to say, I think a shareholder has to worry or would have to think about whether they should be worried that he's going to, focus his attention elsewhere. Having said that, as the judge said, he already owns a huge portion of Tesla. Is he incentivized to keep going, if you will?
Well, shareholders made the judgment. Look, whether shareholders knew or did not know of the conflicts and what the judge cited was lack of process and the like at the time, when shareholders voted on this in 2018, they certainly understood the economics.
Yep.
It was widely reported. I think it was a 25, 30 to 1 shot that this would pay off. The expected value at the time was $2 billion. The shareholders, the sophisticated shareholders, they knew what they were voting.
But Jay, so that's the interesting part about this, which is to say, you're right. In 2018, everyone thought this was a completely shoot for the moon, as I said at the time, a skin in the game program. But and that was thought, but the context was different. Everybody was thinking about it prospectively, and they thought, if magically this actually were to somehow come to be, God bless, you'd be very happy to pay it. However, as you know, there are lots of people that when they get in a position and they can now look back and say, do I need to pay all $50 billion? If I could cut that by $10 billion or $20 billion, would I? And I think that's going to be the question today. And, they did say, Tesla, that there are 4 of the largest shareholders in the company that want this vote and want to vote in favor of it. But I'm curious how you think shareholders should think about this, even the ones that voted in favor of it the first time.
Well, I do believe, and Andrew, I'm not an expert on the terms of this pay package. I do believe that there's a retention element.
Yes.
If the shares are awarded as planned in 2018.
For 5 years. I mean, that was one of the reasons that I thought the program was actually so aligned with shareholders. He has not been granted any of the shares yet. And even if he were to get them today, he would still have to hold them for another 5 years. So he's with the shareholders for the next 5-year ride.
So that to me is the big part of this deal. If Elon does get the compensation package that he was promised those years ago, he would have to hold on to those shares for the next 5 years. And it would be $12 billion less than what he was promised. He was promised about $59 billion in 2018. Now he would get $47 billion, and he would still have to be a shareholder. He cannot sell those shares for the next 5 years. I think it is fully incentivized and aligned with shareholders, number one. Number two, the guy pulled it off. He pulled off a 10x in 5 years. I mean, like you just more than it was a 20x at one point, and then obviously Tesla fell. But you cannot, I think, deny that is real in the context of what's going on with Elon. And to kind of take that away from him, I don't know, dude. It just feels un-American. It feels un-American given how hard he worked to get this done. Tesla right here at 155. We'll see what shareholders end up doing, but I do think they will resoundingly vote yes. SoFi up 1.18%, 729 right now. S&P 500, 505. S&P is green, baby. We are green for the day. Netflix is down just a little bit. Netflix was up about 2% yesterday. Google at 158, Apple 170, Robinhood falling just about 1% right now, 17.14. We'll talk a little bit about Robinhood in a second. CleanSpark up about 1.6%. Microsoft is up. Amazon is up. Nvidia is red on the day, basically flat, but it was green for a second. Now it is red. Snowflake is green. C3 AI. Wow, we haven't looked at this stock in a while. They are at $20.70. They were at 29 for the longest while we were looking at them, I think like 6 months ago. This stock right now, yeah, I would assume it's down year to date. Now, granted, this stock rallied a lot last year. So if you got in early, I think at like $7, you're doing fine. But this one is down over the past few months. Intuit, 615, Twilio, 60. Kathy Wood did buy about $3.2 million of Tesla yesterday. So she bought 20,000 shares, bought a bit of the dip. But no other major buys by Kathy right now outside of buying a little bit more on Tesla. Sandro says, do you think Rivian is eventually going to go bankrupt? Let's have the chat answer that. What do you think? Do you think Rivian is going to go bankrupt? Like, gun to my head, I would say no, because I do think that people like their cars and they are selling their cars. Like Lucid, I think, yes, would go bankrupt. If it wasn't for the Saudis, I think Lucid would go bankrupt. Rivian, I think, will find a way through. I just don't know how much pain you would have to endure as a shareholder buying at these prices for them to figure that stuff out. And that is a risk reward given some of the other opportunities that exist in the market, that I don't know if it's worth it. Like, could Rivian go to $13 tomorrow? I think it could. I think market sentiment could totally change. And, the market could be like, yeah, Tesla's struggling a little bit, so let's diversify some funds. But on the contrary, if Tesla's struggling, why should Rivian, NIO, or freaking, what's that other stock, or Lucid get the premium? Speaking of NIO, it was really funny today. So my sister has her Roth IRA, and she was asking me today, hey, should I invest in some Tesla in my Roth IRA? She has like basically 14 grand that she hasn't touched. And I said, yeah, if you want to dibble in on Tesla, like if you want to put $1,000 right now, buy 10 shares and then wait till earnings, that's totally fine. She likes Tesla. She believes in the company. And so I said, yeah, you can buy 10 shares. And then I looked at her portfolio because she let me log in on my computer, and I was just looking at it. She has, I don't know how many, I think it's like 200 shares of NIO. She was down 95% on these shares. Dude, she bought these shits at $55. And look, it's like, it was 2020. It was the bull market. Everyone makes mistakes, right? I have my fair share. I'm sure other people have their fair share. It is what it is. It's a mistake. Like, you got to move on. And I said, Didi, because in Hindi, you call your big sister Didi. I was like, please, for the love of God, can I sell these freaking shares? You'll get like $1,000. We will put that $1,000 to somewhere that can be effective. It's not going back to $55. The stock's below $4. And she was like, if you sell those shares, I will kill you. And I couldn't convince her. I'm not going to sell it without her permission, right? So I was like, please, for the love of God, this stock is not going to go 20x. I'm sorry. It did that in 2020 when we had low interest rate. It's not happening this time. And she was like, nope, I can't sell it. So it just goes to show some of the irrationality that exists in the market. My sister is not that different from many other investors. And look, there's no shade at my sister. She's a very smart person at her job. She does a great job. She does what she does, right? She's well respected in her industry. When it comes to stocks, she doesn't really understand why a stock that fell 95% probably makes no sense to hold on to it, right? The stock would have to go up 2,000% for you to break even. So it's like, she just doesn't get it. And I think a lot of people also feel like that. So could people buy Rivian just based off the irrationality, or hold on to the Rivian because they think it'll come back? Maybe. But it's unlikely, I think, for sophisticated investors to take a big, big bet on Rivian. Now, ironically, speaking of sophisticated investors, Gary Black is long Rivian. He has sold 10% of his Tesla stake, and he is long a decent amount of his Rivian stake. And so Rivian and Uber are his big bets. Rivian has not been doing well. He's been long since like $15 on Rivian. So, or actually, no, since $22 on Rivian, he's been long. So we'll see how that one plays out. But you do have some institutional people on the side of Rivian, like Gary Black. How many more actually join the party? Okay, cool. Let's get an update from Pomp. He's on CNBC talking about Bitcoin to 100K. Let's see if he has any new arguments he can make to get us to believe this will happen. Here we go.
Is away now until the Bitcoin halving, which reduces the supply of new Bitcoins. Currently, Bitcoin price is sitting at $62,710. Joining us now, Anthony Pompliano, Pomp Investments founder and partner. I want to talk about the halving. I want to talk about the run-up in the price, and also the flip of that, which we saw last weekend. You were kind enough to tweet back at me over the weekend. We were trying to understand some of the movements. Explain to the audience what you think has happened even in the past week, both in terms of the run-up and maybe this move lower.
Yeah. Well, let's put everything in context, right? Talking about Bitcoin is crashing to $64,000 was a dream just a few years ago. So we're up significantly. Since the last halving to today, about 4 years, we're up 800%. So it's been incredible performance. This year to date, it's about 40%. Compare that to gold. Gold's up 7%, year to date. And in the last 5 years, it's only up about 11%. Now, the reason why I bring that up, what I think is really interesting is you actually have lost purchasing power if you've held gold over the last 5 years. Inflation has outpaced gold's performance. So the whole narrative of gold protects your purchasing.
Real quick, guys, breaking news. Tesla CEO Elon Musk is set to announce an investment in India of $3 billion for a new factory. That is breaking right now. I got the notification. So Tesla India looks like it's going to happen. We'll talk more right after this.
Power is now been debunked, right? For the last 5 years, that's not true. Bitcoin has. So when we start talking about this price run up, that 40% increase to start the year, all of a sudden, why is the price going up? ETFs are a huge piece of it. Also, I think people leading into the halving, that's a big piece of it. But the government has decided we are going to debase the currency, right? And I think that now the world has understood the United States has a debt problem and we're going to debase the currency. So there's some of that going on as well. Now, over the weekend, the price sells off. And I think there's really three things that drove that price sell off. The first is that whenever there's a moment of fear, right, everyone panics. And what do? They still buy dollars. And so some people are selling because of that. The second thing is on the weekend, even though the Bitcoin market is open, the bank system is not open. And so you can't get net new dollars into your crypto account to buy Bitcoin. So the only thing you really can do is if you're holding Bitcoin, you can sell it. But most of the people holding Bitcoin are fully allocated. So they don't have dollars to go buy more Bitcoin. There's a very interesting dynamic where even though you want to buy more Bitcoin, you're closed out of the system as well because the banking system won't let you wire in.
I think that argument makes no sense, dude. I don't know what he just spoke like a third grader spoke. People did not buy Bitcoin when Iran attacked Israel. It's that simple. There's no dollars. There's no. The people they sold Bitcoin. They didn't buy it. It's not that complicated to me.
You're saying people would have bought Bitcoin on Middle East tensions if the banking system were open?
The joke is that the real Bitcoiners want the price to go down so they can buy more of it.
So what have we seen since...
No, but that didn't answer the question. That was his argument. His argument is if the banking system was open and you could deposit more money into your Coinbase account, you would buy Bitcoin during the Middle Eastern crisis. That has got to... Look, I respect Pomp, but that's just... You could just admit, dude, people don't want to buy Bitcoin when there's a geopolitical crisis. I don't think you have to. I don't think that makes sense.
Since then, in terms of the price of, we didn't go up a lot.
We didn't go up a lot, but we're basically flat since.
So no one is buying
since Monday
on the heels of Middle East tensions.
Well, I think that the other thing that's happening is that now Bitcoin is being pulled into the legacy system, and so now it's very hard to kind of prove this. But high frequency traders and kind of more algorithmic trading. When all of the news hit Twitter and kind of the social sentiment changed very quickly, you saw a massive amount of tweets about Iran and Israel and rockets and drones, etc. There's a very quick sell-off. I find it hard to believe that humans were able to read Twitter, immediately go to their computer and start hitting the sell button. And so there's got to be some algorithmic trading that's going on there as well, where people are trading headlines, but it's unclear how to measure
Let's
that.
just understand this, because part of it is, so the folks who are selling likely are selling actual Bitcoin,
yes,
not the ETFs, because this was happening.
Yes, closed
over the weekend, right?
Correct.
And so, then the question seems like the natural follow-up is why were they not back in the market, either by ETFs or something else? Put the algos aside since then, and on the back of what I imagine is you think a bullish sign on the halving piece of this, which is about to happen.
I think that markets are forward looking. And part of my analysis is just that, we went up 40% because people are already pricing some of this stuff in. If we go and we look, we had Russia invading Ukraine, we have Hamas, Israel, now we have Iran, Israel. At some point, there's a less severe reaction to each one of these kind of geopolitical events, because I think people are starting to say, there are problems in the Middle East. Right. And so, again, that doesn't talk down the severity of what actually happened. But I think that the financial assets themselves are becoming less sensitive to those movements. And then in terms of buying more Bitcoin, I do think that there's this very interesting dynamic of everybody that I know in the hardcore Bitcoin community. They've bought as much Bitcoin as they possibly can. The net new dollars that are going to come into this industry are going to come from Wall Street. Right. And so what is Wall Street doing? Wall Street's not rushing to go buy Bitcoin today. And I think that there's a lot of folks on Wall Street who don't yet even understand the halving. And so what's going to really play out here is over the next 12 to 18 months, we'll see that impact.
And they're not buying because, the only reason you wouldn't buy today, besides that you may not have the opportunity, which is to say there's an argument that, advisors, a lot of firms don't have it on offer yet. But there's also the view, I think by some, that the price is still going to come down. So how do you see, what do you see as the window for where the price sits right now?
Yeah. So if we look at price movements themselves, Bitcoin's down about 8%, 9%. In 2017 bull market, there was 13 drawdowns of 12% or more. There was 13 drawdowns of 10% or more in the 2020 drawdown from Galaxy Research. And so when you see that big of drawdowns, 8% is actually pretty small drawdown compared to most times in bull markets. And so my expectation here is that Wall Street is probably trying to time the market a little bit, understand, what's the price level, so looking at technicals, et cetera. But over time, what we have found is that in these drawdowns, they're getting less and less severe. So
Okay, so his basic argument is that, hey, Bitcoin will pump. You just have to trust and believe me. Look, I think the problem sometimes with the Bitcoin bulls, and I'm bullish on Bitcoin, but I could also be objective, just like I'm bullish on Tesla, and I can be objective that the executives leaving is not good news. People were not buying it as a flight to safety when Iran was attacking Israel and everyone thought we were getting World War III. The idea that your bank wasn't open so you couldn't deposit, first of all, that's not even true. Like on like a platform like Robinhood, I can get my money immediately. Even if it's a Saturday, right? And then on Monday, they'll take it out, but they'll give it so I could have bought and people have excess cash that they can use to buy Bitcoin. I don't think they were, that people have just zero cash sitting in their brokerages that they can't buy Bitcoin on Coinbase or Binance or Robinhood or whatever. So I think that argument is bad. And I think it'd make more sense for him to just be like, yeah, it's still a risky asset and people don't want to buy it when there's a world war going on, right? Now, gold, a little bit less risky given the market cap and given what it's proven over the past, centuries. Changes the perspective here when it comes to Bitcoin. But right now, Bitcoin is struggling a little bit. And I do think after the halving event, it's going to do well, but it might take some time for that to happen. Tesla right now struggling as well, down 2%. So the breaking news from Reuters is that Tesla is planning a $3 billion investment into India during their visit. We kind of knew this was going to happen a couple of weeks ago, and now it seems like it's breaking and it's actually happening right here. So let me pull this up right here. Musk likely to announce Tesla's India entry after meeting with Modi on April 22nd. You can expect a general announcement that the US-based EV company is coming to India. That to announce a specific site, Tesla specifically needs board approval, which may happen only later. For now, Musk may welcome the EV policy, says that he's looking forward to being in an Indian market soon. The official who spoke under the condition of anonymity says to Reuters and moneycontrol.com. Look, Modi, who's the prime minister of India, and Elon have a really good relationship. They've taken plenty of pictures together. They like each other. I do think this is happening. And if we do get a factory in India and potentially robo-taxis in India, which I think there's no way in hell, dude, I'm going to India in October. I haven't been there in 5 years, but in India, there's a rickshaw driver, there's a cow, there's a motorcycle, there's a little kid, there's 17 cars. There's like anything you could imagine on the roads. Forget the roads, on the highways. There's rickshaw drivers on the highways, dude. Like I couldn't imagine robo-taxis would be trained to be successful there. If Elon pulls that off in India, and I mean, that's just, that would be insane. But I think the factory would be more bullish as well, getting that to happen in India. I would love it, dude. If Tesla's a factory in India, that would be incredible. Tesla right now, 154, down about 1.73%. Robinhood 17.15 right now. Elf stock that took a beating last week. Elf right now, wow, 165 as well. They were at 180 over the past couple months, but then Ulta came out with that news the other day that their makeup sales are going to be down 15% year over year. And so Elf, who's in the makeup industry, fell on that as well. Palantir down. Wow, SoFi is up 2%. Palantir is down. So a little bit of an inverse. Usually we see the opposite. Palantir right now 21.70. SoFi at 7.30. PayPal 63.27. Nice to see SoFi doing well on a relatively reddish day for some of the fintech companies right now. Seeing SoFi hold its ground, and hopefully the market's getting excited for those Q1 earnings and not necessarily falling is a good thing as well. DJT is up 10%. Dude, if you're invested in Trump, it's got to be it's got to be a roller coaster right now. It's absolutely a roller coaster. The thing was down 15% yesterday. It's up 10% today. It's just got to be a roller coaster. That's the only way you can justify continuing to invest. What part of India am I from? I'm from New Delhi. I was born in America, but my parents are from New Delhi. So I guess I'm Punjabi. That's like my roots. But yeah, I'll be going back to New Delhi in October. I have the wedding there for a family. I haven't been there in 5 years, so I'm excited to see how India has transformed. But it will be interesting to see what's happening in India. And hopefully Tesla's a factory by then. Probably not, but that would be crazy if they did. Goldman Sachs up about 2%. DJT up 9%. Lockheed Martin is down a little bit. And that Destiny Tech ETF we were talking about, down 22% on the day. Bitcoin right now took a nasty red candle, 62,355. It was at 62,700. That one is also down on the day, and that is also why some of these crypto stocks are struggling right now as well. Okay, so that's what we got in the context of in the context of Bitcoin. I want to show you guys what I said I would show you guys earlier in the day, which is this ARK Venture Fund analysis that they did that I thought was really interesting. So let's look at this. They kind of came for Destiny Tech ETFs, which is not really even an ETF, to be honest. They came for their neck. So let me pull this up right here and kind of show what I'm looking at right now. I thought this analysis was really interesting, and I think it gives a lot of perspective to anyone who buys the Destiny Tech ETF as well, if you're buying it at these prices. So they basically said yesterday, so this was their thread. Here's why the Destiny Tech 100 fund might be too good to be true. It's a closed-end ETF. These funds are investment companies that pool money from investors to purchase securities through an initial public offering that offers a fixed number of shares. But what does this mean for investors? Essentially, DXYZ went public on March 26, 2024, issuing a little over 1.4 million shares of stock. Because there is a fixed supply of shares outstanding, the price of these shares moves based on supply and demand. In other words, if a lot of investors purchase shares of the fund, it will appreciate. If they don't, it won't. This is unlike ETFs, mutual funds, and interval funds, whose prices move that move more closely reflect their NAV, or their net asset value. Now, their NAV is very important when we think about what it means to invest in a venture fund. The NAV per share of a fund is computed by dividing the value of the net assets of the fund, so like how much of the SpaceX or OpenAI do they actually own, by the total number of shares outstanding. Expenses, fees, etc. are all accrued daily and taken into account for the NAV. It is generally considered good when the market price and the net asset value of fund closely resemble each other, because that means what investors are paying is matching the calculated value of the underlying portfolio, in this case of SpaceX, OpenAI, etc. So investors buying into a fund are usually trying to gain access to the underlying holdings of the fund. In Destiny's case, investors will be trying to gain access to SpaceX, Discord, Epic, etc. Unfortunately, and this is the big, part of the fund of the thread that I thought was interesting. The average market price of DXYZ in its first 12 trading days was $40, which is what investors have been paying. The NAV is around 5. You are paying 8x, 800% extra against the NAV if you're buying this fund, which means, in other words, you're paying a massive premium to get access to the companies in Destiny's portfolio. So then they just talk about why their fund is different and why you can invest in their fund. And look, I don't think the ARK Venture Fund is that amazing either. But the point is, the NAV and the delta between the NAV and the share price of the fund is not the insane 800% delta to the upside that we're seeing in the context of the Destiny Tech Fund. What does that mean to say? That means to say, be careful if you're speculating on this one, because right now the price of this thing, Bitcoin, falling right below 62,000. Looks like we're going to see 61 today. Right now it's 33. So 33 divided by 5, you're paying a little bit more than 6x of a premium. You should be paying $5, dude. Like SpaceX, OpenAI are still, these companies still have to go public one day. So like the idea, or maybe you're paying like a 2x in premium, but paying a 6x, just like, it's kind of insane, right? So from that perspective, I do think it makes sense to be a little cautious when it comes to those funds as well. Cool. So that's what we got in the context of Destiny Tech. A bot says, will the Elon 47 billion dilute shareholders by 10%? To my understanding, no, I don't think so. Because this is compensation for previous work that he's done since 2018. So I don't think him getting 47 billion would be dilution of 10%. I could be wrong on that, but I don't think that's the case. Because those shares, they're basically approved already. The judge just struck it down, but it's not like they have to remake those shares, to my understanding. So if that's the case, it shouldn't be a net harm to shareholders, even if it's just like a little bit of dilution that happens as well. ARM is tanking. Okay, let's still go back to equities, and then we'll talk about a couple other stories I had. ARM right now. Wow. ARM is finally down, dude. It has taken ARM so long to go below 120. This company, in my opinion, what's the market cap now? Yeah, 120 billion. We've been talking about ARM for a long time. $3 billion in revenue, 18% year-over-year growth, hardware company, not software company. So the margins are not 80, 90%. Market cap's 120 billion. It looks like the easiest short of all time. But again, it being the easiest short of all time and saying it's the easiest short of all time is definitely different than actually shorting it, which is why I don't have puts or I'm not shorting it. But it looks insane, right? This valuation looks ridiculous. Now, granted, it's been given the premium because SMCI and NVIDIA have done well, but SMCI and NVIDIA actually have the numbers. ARM doesn't have the numbers. So although I think people are betting on it as a short, it might not necessarily come down. The other thing is the SoftBank, the founders of the holding company of ARM. I think they're going to dump their shares if they haven't already. The float right now is 99 million. I think that should increase to like 150 million over the coming months, which should also dilute shareholders and get that stock price to come down as well. Kevin is short arm. That is correct. Kevin is short arm right now as well. So that's what we have. ARM's PE is ridiculously high. Yes, ARM's PE is it just doesn't make sense to me. Nvidia's down 1%. ASML, wow, down almost 7%. ASML, maybe that's a buy the dip. I like the CEO said demand's going to be fine throughout the end of the year, but right now demand is, at least in this quarter, down 60%. Dude, it went from 5.9 billion to 700 million. Not the best for ASML, but that one is down currently right now, and it'll be interesting to see if investors buy the dip on that one. And MicroStrategy down 4.5%. Why are they down? Because Bitcoin can barely hold 62,000 right now, and DJT is up 9% on the day. United had earnings yesterday. They crushed earnings. I think they're up 2%. Yeah, look at, wow, holy crap. United's up 11%. Oh my God, dude. They had it after hours yesterday. I didn't even cover it on the market close because I forgot. Otherwise, I would have covered it. But I didn't even know. Why are they up 11%? I saw they had good earnings, but did they announce like something crazy? That is incredible, dude. United, 11% on an airline company. You don't get that, dude. That doesn't happen for the airlines. That's acting like a tech stock right now. United stock, and also, I mean, the Boeing controversy definitely affects them because they get a ton of those planes. United stock props on Q1 results despite a $200 million loss that they took. They beat estimates on revenue and EPS. That's it. It doesn't seem like anything special from that. Full self-flying. Well, if we ever have, could you imagine? Okay, would you ever get on a flight that was full self-flying? Would you ever get on a flight that was full self-flying? And if you wouldn't, why would you get in a car that was full self-driving? Meaning there's no pilot for the flight, dude. Like, let's say AI gets so good and technically the air is less risky than the roads. I mean, we have way less plane accidents, like by orders of magnitude, than car accidents. So like, it's not the craziest idea. I mean, it's fucking crazy, dude. I don't think I would ever get in that airplane, but it's not the crazy thing to say that AI could get so advanced that the airplanes could potentially fly you around without a pilot. Some people are actually saying yes. Wow, I'm surprised, dude. I don't think I could ever get in a fucking airplane with no pilot, dude. Like, you know, when there's turbulence, you need the pilot to be like, alrighty, folks. It's always alrighty, folks. It's literally always, it's alrighty, folks. We're going through some slight turbulence here in the air, 35,000 feet in the air right now. We have turned on the seatbelt sign right now. You can put on your seatbelts. Please refrain from standing up or walking. Like, you know, like you need that person because at that point, dude, I start praying and I start being like, you know what? I made some mistakes. I'm sorry. I didn't mean to fucking do this stuff. Like that's when, you know, that's when I start being like, all right, this is like, we got to get serious. We got to cover some bases here in case this shit goes down. And if there was not a automated pilot that could walk me through that would be pretty tough, dude. That would be pretty tough. Anyway, United's still up 11% right now and looking good for United. Now, Delta was up as well on their earnings, which is why, yeah, Delta's up 2%. The airlines are killing it, absolutely killing it this year, which is not bad at all. Microsoft right here at 415. Let's look at the Max 7. Max 7. Google's up, Amazon's up, Meta's down, Nvidia's down, Tesla's down. Wow, Tesla 154 and now down almost 2%. Apple 170, and then Microsoft 415 on the day right now. AI can say, alrighty, folks, that's true. AI can say that. But still, it's like you need a really good calming voice to get through that situation. You just do. You need a good calming voice there. Okay, a couple of other things I want to show, and then we will get you guys out of here. One quick thing on the IMF. So the IMF came out yesterday, and they said the reason you should still be bullish on the U.S. economy is because we believe GDP growth is going to scale and double over the next coming years. So that's good for like overall growth is going to be there. And they said propelled by things like AI. However, their argument is that interest payments on US debt, we are paying $1 trillion every 100 days. There are 365 days in a year. So we're paying over $3 trillion a year on this debt. I mean, it's getting to a point where this is just like insane, dude. This is absolutely insane. So at this point, the argument here is that the debt to GDP ratio, Japan's at like 200%. We're at, I think, like 110%. If that gets closer to that 200% range, then it's going to be something the IMF was basically warning where like this is going to be unsustainable. And I don't know. I mean, the solution to this, we all know what the solution is. The solution is that we have to cut spending. No one, Democrats or Republicans, is ready to cut spending. So hopefully we grow ourselves out of this situation, but is AI going to be big enough to grow ourselves out of racking up $1 trillion of debt every 100 days? I don't know. But that is one thing that the IMF did say yesterday that we definitely need to keep an eye on and see what's going to happen in the context of some of those debt payments that we have going on. Who's the interest payment going to? It's going to people who are buying U.S. treasuries. Japan is buying a lot of those treasuries. Other countries are buying those treasuries. American people, if you have your money in a money market fund, right, you own a part of U.S. debt. So the U.S. is technically, the argument's been that the U.S. is always good for our debt. And that's why we shouldn't worry so much, because if we're good for the debt, it's not going to be an issue. But the problem is, you know, if we're not good for the debt one day, then what's going to happen? Things are being a much tougher situation when it comes to financing that debt. Tesla right now is 153. Is Tesla there? Oh boy, did it get there? Wow, 153.87. Dude, we are $3 away from the 140s. We haven't seen 140s on Tesla since March of 2023. And that's when it was rebounding from touching 100 back in January of 2023. ETH below 3K. Holy crap. ETH's below 3K. Oh my God. It's basically right at that $3,000 level. Well, then where's Bitcoin if ETH is there? Yeah, well, Bitcoin's somehow holding on to 62. I wouldn't, dude, at this point, I would not be surprised if we see Bitcoin get below 60,000. Seems like, now I think the rebound will happen, but it's in a downward trend and it's failing to make some of these key levels that it needs to make to pick up. I mean, ever since Iran attacked Israel, it just hasn't moved at all. I mean, it's only moved to the downside is my point. It hasn't moved back to those $72,000 levels that we hit every single Sunday. We get back to those levels. We're not there. We're just not there. Bitcoin will get us out of debt. Hopefully one day, dude. Hopefully that's the only fucking saving grace that we have, that Bitcoin appreciates so much that we could sell some of Bitcoin. And now that's probably not going to happen. That's a pipe dream, but it's going to be tough. It's going to be tough to see what happens. Bitcoin does dump before the halving of it and then tends to ultra pump. I agree. That tends to happen. Look, here's the other thing. If we have more liquidity that enters the system, post-halving event, which means we would get rate cuts, which right now it looks iffy, but if that happens September, October, that would be the time for Bitcoin to start making its start doing what it needs to do. And maybe it doesn't take till September, October. Maybe it happens in summer, but maybe it does. But I do think this year is still going to be very bullish for Bitcoin in general. Okay, cool. Pfizer's at 25 as well. Wow, Pfizer so far has been the definition of a value trap. Wow, Bitcoin right here, 61.7, and then Pfizer's at 25. Pfizer, everyone thought, including me, I didn't buy any, but at decade lows, I thought, hey, it's not the worst thing to buy. This thing is just going lower and lower for the dividend. That was the main reason. The dividend right now, 7%, 6.5%. But it's the problem with when you buy a high dividend company, the company has to be quality, right? If you buy a company that sucks, even if you're making a good dividend, if the stock's going down, like at the end of the day, how much capital, how much appreciation are you really getting on the money you invested in the company? Pfizer here, so is at 25, and then BTC, ETH below 23,000, 29.70. So there you go on ETH. And then Bitcoin, nice big green red candle from, look at that, it keeps going down, 62 to 61.5. So the crypto stock should be down right now. Robinhood below 17, there you go. Robinhood below 17, Coinbase 212, CleanSpark 14.3. Riot is down, Marathon 14.2. And MicroStrategy, oh my God, MicroStrategy is down 6%, dude, 11.88. Oh boy, oh boy, oh boy, oh boy. This is what, and the market's falling. S&P is falling as well. There you go. S&P is falling as well. We are seeing a little bit more red. It is happening. S&P is like barely holding on to the green. Market's dumping right now. There's no new, it's up 0.13% right now. It's about 60 cents away from going red. Is there any news that came out just now to trigger this? Let me see. United Kingdom's inflation rate fell 3.2% from 3.4. That's good news, not horrible. South Africa's inflation rate came down from 5.6 to 5.3. That's not too bad. Outside of that, Japan has had their trade balance swing to a surplus, which I think is good. That's not bad. So no crazy. Mortgage rates are high. We got that news in the morning. Market didn't really react to that. But outside of that, seems like people are just taking profits right now, or market's a little scared. Wow, Bitcoin right here. Dude, do we see below 60 grand on Bitcoin? I kind of want it to happen and just get it over with, rip off the Band-Aid, and so we can move forward, especially because the halving is in like 3 days. So now granted, we're probably going to dump on the halving as well. Historically, that's what happens, but it's not the craziest thing to see Bitcoin fall below right now. Israel news, let me see. Is there any Israel news? Let's see. Is there any breaking Israel news? So 30 minutes ago, no, there's no new news. They didn't decide to attack yet. Basically, the news is Netanyahu has said Israel will make their own decisions on responding to it. Basically, they said, fuck you, Biden. We don't really care about your thoughts. This is what he said. I thank our friends for their support for the defense of Israel. They also have all kinds of suggestions and advice. I appreciate it, but I want to make it clear we will make our own decisions and the state of Israel will do everything necessary to defend itself. Dude, talk about a middle finger. Bibi is basically saying, we don't give a shit what you guys are saying. We're going to act how we want to act. But thanks for the advice. Thanks for giving me a call, but I'm going to do what I want to do. So that's not any new news that should be taking the markets down, but I mean, they're definitely going to attack. It seems like it's going to happen. Do we sell or hold if there is a regional war? You know, the problem with that question is it depends on the equities that you're in. And it also depends what your timeline is for those equities, right? Like, for example, if you're at Robinhood at an $8 average, do you sell because there's a war happening at 17 or even at 15? No, I think that, you know, that your margin of safety is so strong. Now, if you're at a $18 average or a 17.4 average and you can take a slight loss because you think there's some more downside, that's not the best thing to do in these, you know, you're not supposed to be timing the market, but if you want to free up some cash, if you really do think shit's going to hit the fan, it's not the craziest thing in the world to get out a little early before things happen. But also if you put a position at 1740, then DCAing at 15 isn't the worst thing either, right? So I don't think this is really a sell event. I think a lot of dumb money will be selling on this news as well, because there's not a full-blown conflict either. Like, this is not World War III. And even if they do attack, if Iran just takes it on the chin and they're like, all right, whatever, you got your punch, we got our punch, we're good to go, I think markets can rally off that. And oil could potentially start to come back down, which would be really good. So I don't think selling makes a lot of sense here. But if this thing turns into a much bigger conflict, which I don't think it's going to be the case, but if it does, I mean, then yeah, stocks could definitely see a little bit more decline than we're seeing right now. I do also think if earnings, yeah, Matt has a good point. If earnings are going to be good for a majority of companies, then that's another reason to be a little cautious before you just jump the gun. Like, I mean, like on Robinhood was at 16, almost 1690 yesterday, 1693. If you sold yesterday, the thing rebounded to 1750. Will that happen today? I don't know. But the point is, they got an upgrade yesterday. Goldman Sachs was like, hey, $20. Webull, by the way, the app I'm using right now, they're being investigated by the Department of Justice for leaking financial data to the CCP. I didn't even know. I mean, I knew Webull was a Chinese company, but I didn't know it was like that serious. But multiple U.S. states are now potentially suing Webull. They're looking into them for potentially disclosing client information into China. This news came out yesterday. I don't have any money in Webull. I've never understood putting money into Webull. The user interface itself has just like not been that exciting to me. But if you got money in Webull, you should be just a little cautious here, because I mean, anything can happen with a Chinese company. Webull is indeed a Chinese company. They have amazing charts, but they're a Chinese company at the end of the day. So if you have some money in Webull, just be a little cautious there and keep up with this story. I don't think anything crazy is going to happen, but I mean, it is kind of weird, dude. I mean, like, TikTok's is definitely working with the CCP. So I would imagine Webull, if the CCP wanted financial information, Webull would have to give it up. There's no way in hell Webull could not give it up. Otherwise they would get Jack Mod. The question is, did the CCP actually ask, and did Webull actually give it up? And so that investigation will probably give a little bit more of information. Moomoo is the same deal. Yeah, dude, Moomoo is asked to sponsor the channel so many times. I'm like, first of all, you guys, you sound like the name of your company is a fucking cow. Like, what do I look like being like, hey guys, use my affiliate link to download Moomoo? Like, whenever I heard a YouTuber say that back in 2021 when they were really getting popular, I was like, you sound like a dork. You sound like a fucking dork, dude. Like, download Moomoo. I'm like, what type of name? I do not trust any company named Moomoo, dude. Are you kidding me? Second of all, it's disrespectful because I'm Indian and we worship the cow. And so you're asking me to know that's a joke. That's a joke. I'm just kidding. That's a joke. That's a joke. I eat steak, so it's a joke. But still, it's so weird that the company's named Moomoo. So that's already red flag number one. Number two, it's in China, and you got to be careful when it comes to China. S&P still green. S&P is still green, 504. S&P is still green right now. Interesting to see. Some of the market, some of the other equities are down. Nvidia's down, Tesla's down, Palantir, what's Palantir down 2%? Palantir 2159, Palantir is down as well. But the market's continuing to rally, at least the indices. QQQ, is that up? That's down a little bit. And then IWM, is that up? Wow, small caps are up. Small caps and the S&P are up, while the rest of these individual equities are trending downwards today. Very interesting. You could ring the bell every time you say moo moo. Yeah, honestly, with the cowbell, it would be a really good partnership, right? Moo moo cowbell. But like, I just like, that's just so weird, dude. It's like, it's just, that entire company's ethos to me is, I could never imagine myself downloading an app and trading on it called moo moo. Like, is that it? Hold on, let me see on the App Store. Are they moo moo? Do they have an iPhone app or is it just desktop? No, they have an app. Moo moo. This is what it is. Trading and investing. I think a cow is their logo. They have 21 million global users. Okay. This is decent. They're not ranking on the finance charts, so they're not getting a ton of downloads. By the way, I was speaking to a guy. I had a meeting with a guy who runs a finance app. They're raising a Series A, so I'm not going to say the name of the company yet, but they are ranking right now. Their number, I can't say the number because then you guys will know. I can't disclose yet, but they ranked on the iOS charts historically from like number 30 to number 100. And when we were in that meeting, he showed me the iOS app downloads on how many people actually, because this is like information I've never been able to see, right? Like how many downloads do you actually get if you're number 30 or number 25 on the iOS App Store? And he was getting like 7,000 a day, being in like that kind of 35-ish to 50-ish realm. And I asked him, what do you think about Robinhood when they were top 10? He was like, dude, they were getting like 50,000 downloads a day at that point. So, Vitaly says he's signing up now. So it brings you context in what's going on with Robinhood. Also, I have this really cool thing I want to show you guys this like neat thing I found. So here's this thing I downloaded on my phone. You see right here, it has this thing called App Stats. So I'm going to click this right here. And as soon as I click it, it analyzes an app and it tells me roughly how many downloads and how much revenue the app made. And for Robinhood, it said they got about 400,000 downloads yesterday. Now, we don't know if this is fully accurate, but it's one of the best ones I've seen. I'm going to do Instagram right now to show you guys another one of it. So I click this little, it's like a little plugin on the iPhone. Instagram got 10 million downloads and they made $11 million of revenue last month. So if you rank high in that 1 to 20 category on the App Store, obviously the top 200 apps are getting millions of downloads. If you're in finance, you're getting at least 10,000 a day. His argument was Robinhood probably was exploding when they were in the top 10 back in February, which is good for those gold subscriber numbers and overall subscriber numbers in general. Was there an earthquake in Japan? Did we just get another earthquake? Oh boy. Did we just get an earthquake right now? What's going on? Earthquake in Japan, 6.4. That's a lot. I don't see anything on the news. Yeah, here we go. The Japan Times, 6.4 earthquake hits southern. That might be why the market's down as well. That might be why the market is down as well. If you want that feature, guys, just DM me on Twitter because it's like a plugin you have to download. So DM me on Twitter and I'll send you the link. DM me on Twitter and I'll send you the link. Twitter's in the description. 6.4 earthquake hit Japan on the west coast of Japan, Shikoku Island. There was no threat of a tsunami, and it was not immediately clear if the quake had caused injuries or damages. You guys are saying 6.4 isn't crazy? I mean, you're probably right. New York had 5.5, and it wasn't that bad. But granted, 6.4 is a little bit higher than that, and Japan has more earthquakes. Could that be why some of these stocks are going down? Because of the Japanese earthquake? Just any instability in general could cause some turmoil in the markets? Maybe that could be a reason. Matt says, haven't heard anything about earthquakes in the last 3 years, and all of a sudden they were happening everywhere. Speaking of earthquakes and climate disasters, I saw a stat. Let me see if I have this saved. 2024, I mean, it's not really that interesting of a stat because we already know this. 2024 is the hottest year on record for the planet. And that's following 2023, which was oh yeah, here it goes. Earth has its warmest March on record. So it's March, but basically that means 2024 in general is becoming very hot. So this is what we got for March. So Axios reported 2024 is showing the hottest temperatures we're seeing on global surface areas, beating 2023. Look, at least the weather's good outside, right? It's when I see this stuff, there's nothing I could say, dude. At this point, I feel helpless when it comes to climate change. A lot of people will get mad at me for saying this. I kind of don't care at this point. Like, it is what it is. My philosophical approach to climate change is let's invest in companies that are issuing renewable energies. Let's use capitalism to try to solve the issue. Let's not try to get rid of capitalism and have this degrowth movement that the Greta Thunbergs of the world believe in. I think that's stupid. I think we have to use capitalism and innovate. The only way we get ourselves out of this situation is innovating. And if we fail to innovate in the next 50 years, we're kind of fucked. But hopefully we will innovate. And hopefully it's not going to be as bad as it can be. Did you see Dubai's airport? Yeah, Dubai is underwater as well. Dubai has been in a tough situation right now. Dubai, let me pull up a video for those that haven't seen anything that's going on in the context of Dubai. So we've had a record rain in Dubai. They haven't had rain in months. So a lot of the rain is coming all at once. And that rain is harming Dubai as well right now.
Over the United Arab Emirates, prompting flight cancellations at the second busiest airport in the world, school shutdowns and traffic at a standstill. Some amazing flooding conditions there. Bonnie Quinn has had a front row seat to it. We go out to her in Dubai for an update on what's happening. Bonnie.
Will remain, as you can see right behind me, this is part of the DIFC complex within Dubai, which is its own self-regulated complex of financial institutions. We're talking about more than 50 hedge funds, more than 200 banks based here, more than 100 insurance companies and 350 wealth managers. All told, more than 41,000 people work here on a daily basis. That was impacted, as you can see today. Dubai is not a walking city. It is very much a city that runs on taxis, Ubers, and driving. Public transportation fairly limited in Dubai. Within a few hours of this rain starting, you can see what happened. Cars were abandoned everywhere. I'm looking down from the 34th floor of a hotel room. Cars are abandoned outside right now. The cars that are managing to make it through are being guided through by emergency vehicles, and it really is a sight to see. Dubai every now and then gets these large rainfalls. However, infrastructurally, it's not quite able to manage them. It doesn't have the drainage, although it needs the rainfall for extra water security.
So I have some friends that are sitting on some pretty big crypto profits. They bet big late last year, and they're up a lot of money. They have specifically told me they cannot sell their crypto until they officially move to Dubai. Because if they were to sell it in the United States, the taxes would be gigantic. Dubai does not have taxes. I think they don't have capital gains tax in general. By the way, Canada just increased their capital gains tax yesterday, but Dubai does not have it. So I literally have some friends who are sitting on so much freaking money, like it's insane. They bet on some really, I mean, you guys, they're not going to believe it, but they bet on some meme coins really early, and now those meme coins have ballooned to the point where even if those meme coins were to fall 50%, they would still have so much money. They were just that early that they literally are planning to leave America, move to Dubai to be able to take their profits. Once you sell, when you land in Dubai, you're good to go. The government's not going to take any of that money. You do that in New York or California, yeah, you're fucked. You gotta pay up. So it's kind of crazy. It's kind of crazy. I'm not going to say what coin, but they bet on some coins. They made a lot of money. And we were talking the other week, and they're like, yo, dude, I'm literally thinking I need to move to Dubai because it's that much money, dude. And in the United States, they would take 50% of that, of those taxes, of those gains. So it is interesting to see a lot of crypto bros, finance people have moved to Dubai. There's kind of this like nomadic movement of people that get rich and get off the grid and they go to Dubai because of the lack of taxes. And also because like Dubai is like, I mean, if you're single and Dubai is in your 20s or 30s, I mean, like, it's like, you know, it's a party. So those people are definitely underwater right now, but we haven't seen this type of weather turbulence in Dubai in a very long time. But that's what we're seeing right now. You have to give up your U.S. citizen. Okay, so the friend that I was talking to, the difference between that argument, Adam, is that he's not a U.S. citizen. He's here on a work visa. So that is why he doesn't really care. And that's why I kind of agree with him. I'm like, yeah, dude, if you don't want to stay in the United States for the rest of your life, and you're not even a fully granted citizen because you're here on a work visa, then yeah, dude. I mean, like, why would Dubai? I mean, it's not the craziest idea in the world, and he's going to save a lot of money. But if you're an actual U.S. citizen, yeah, I don't think it's worth giving up the U.S. citizenship. I wouldn't do that even if I was sitting on $10 million. Dude. I would just pay my taxes and stay in the U.S. of A. and get to wake up at the right time to start the market. What time is it in Dubai right now? If I had to do the market open time in Dubai, it's 6 p.m., dude. Could you imagine? That means I would have to do the market open at 4 p.m. if I was in Dubai. That would be disgusting, dude. Like, could you imagine? 4 p.m. is when the market's supposed to be closing. That would be like that's why I never want to move to California. I can't do the market open at What time does 6 a.m. it would have to do? Like, yeah, that's just like, or 4 a.m., 5:30, I would have to wake up. Like I could do it at that early. I just like, it would be weird doing it at that time. But yeah, it is crazy, dude. It's a crazy story. He is sitting on so much money. Like I don't want to say the money or anything, but like it would just be insane if you guys realized how much he got in that early, dude. Like these meme coins, they were worth tens of thousands of dollars in the beginning when they originated. Some of these things are worth many, many hundreds of millions, if not billions. If you get in at that level, like we talk about, oh, can we get a 2x, 3x, 5x? There's people sitting on like 5,000 X's in like 4 months. Like it is insanity. And if Bitcoin pumps, those meme coins are only going to pump higher. And so when you have that much money, you kind of have to ask yourself, and you're not a US citizen, maybe I should protect it and just like get out of here. So it'll be interesting to see how people have to navigate and what's going to happen in Dubai. So let's take a look at the markets. Then I want to show you guys one more thing, and then we'll get out of here. Right now, markets: Palantir 2164, S&P 504, Ethereum below 3,000. Where's Bitcoin? Bitcoin struggling to stay above 61. SoFi somehow green today. SoFi doing okay. Robinhood back above $16 again. They got that price target upgrade yesterday. That was really good. In the context of the Webull news, Webull was trying to go public. That's why the Webull news is so important with the CCP. They were trying to go public at $7 billion. Robinhood right now, if you take away their cash, they're valued at $9 billion. Webull has I think maybe 10% of Robinhood's active accounts. So Webull seems to be either egregiously overvalued and it has the China risk on top of that if they were to go public, or Robinhood is egregiously undervalued. One or the other. But that's one thing to keep in mind in the context of what's happening with Webull. And if this China threat gets bigger, a lot of that money, I think, from Webull will go into Robinhood or consolidate into Robinhood as well. Taiwan Semi down just a little bit, basically flat on the day. Target is up. Walmart is up. Yeah, that's pretty much it. Palantir right now at 2160, down 1.28% on the day. Where's Tesla? Tesla 154.98. Tesla recovering a little bit from 153, and Palantir here at 2160 on the day. Cool. Okay. So last thing I will show right here, and then I'll get you guys out of here. Thank you everybody for being here. And then we'll do the word of the day right after this. So I started this new challenge on Twitter. I don't know if anyone has been keeping up with this. I posted this yesterday. If you can bookmark this tweet on Twitter if you want to keep up with it. So I'm playing with $500,000 paper money, and we're selling options. The rules: we have 500 grand to work with. We're only selling cash secured puts and covered calls, no spreads, and we're aiming for 1% month in returns. I know 1% is relatively conservative, but because I'm new to this, I want to aim super low. So the first move we did yesterday, and we're going to make a second move today, is selling $15 strike May 10th cash secured puts on Robinhood. We sold 20 contracts. Again, this is all paper trading. We received $1,100 in premium. We put up $30,000 in collateral. The return on that is 3.6% over 24 days. So basically 1% a week. And the logic here is I think Robinhood does really well after the May 8th earnings. I think 15 would be much harder to get to, even if we had a bad macro environment. But if I get 2,000 shares at $15, which is what I would be obligated to buy if it gets that low, I would gladly buy those shares, and my adjusted cost basis would be $14.45. The delta here is, I think, 0.25. So not that crazy as well in the context of Robinhood. Now, another one that I'm going to tweet right now, I have it saved as a draft. I'm going to be tweeting it here. Let's post it right now as a draft. Okay, and we're going to post that right now. Okay, so that one is posted on the thread, and I'm going to read it to you guys. So basically, I'm going to update this thread every day, and you guys can follow along and paper trade with me if you want to do this as well. So the one we're selling today is Palantir, $20.50 May 10th expiring cash secured puts. So we're going to sell another 20 of these. The delta is 0.3. We got a premium of $2,200, so about $110 per contract. Collateral is $41,000, $2,050 times 20 contracts, $41,000. The return here is 5.4%, or a little bit over 1% over 3 weeks. The logic here: Palantir has earnings on May 6th, which I expect to go very well. Customer count will likely come in higher, which leads me to believe that their top line revenue growth will beat expectations. Adjusted operating margin should continue to stay at 34% or higher, which would be incredible. The street, I think, would really love that. The thing about this trade is that Palantir has gone from 25 to 21 and 22 over the past 5 weeks. So a move to the upside back to $25, given we consolidated there for about a month, is not crazy in my opinion. So I could see that going up higher. And if it does go below the strike, I would take ownership of 2,000 shares at 2050. That would be a 19.4 average, which given we've seen the price action on Palantir, that's not the craziest average. Or I would just roll these puts because until we get to $16, which I really don't see that happening, the premiums would still be pretty damn juicy if we fell back to $19, $18, because then I would be basically selling at the money cash secured puts, which those premiums would be very, very good. So I would have no problem rolling these or taking ownership. And I think this trade also would go pretty well. So that's the reason I'm doing this publicly as well, because in 3 weeks when these expire, we'll be able to see, are these successful trades? Like, did we totally get screwed on these trades, or did they go well? And the logic is there, the analysis is there, and we'll get back to it every single day. We have 430,000 left out of the 500,000 we're starting with, and we'll keep going from there. I'll put this in the chat for anyone who wants to bookmark this as well. Okay, cool. That's it for me. Let's do word of the day, and then we will be done and keep going from there. Okay, I don't even want to pull up this word because I don't know why they do this to me every day. Okay, I'm gonna actually use their pronunciation thing right here. Axolotl. Axolotl. I think that should be okay.
Axolotl.
That's okay. There we go. Axolotl. Axolotl. See, using this thing, I told you guys, if you just use the pronunciation thing, it works. Like every day you guys tell me to just try it on my own and take the risk, and you guys are way too risky. I try to be more risk averse and say, hey, let me use the pronunciation. But everyone in the chat says, no, don't use the pronunciation. Just try it yourself. And that's why I mess up every day. If I just use the pronunciation, it's pretty damn easy, dude. It's not that complicated. So yeah, I'm going to be using that more often. Any of several salamanders that inhabit lakes and ponds of Mexico and remain in the larval stage as sexually mature adults. Mexican lakes and ponds provide the perfect habitat for the axolotl to thrive in its unique larval form. Scientists study the axolotl to better understand regeneration capabilities in amphibians. Okay. I don't know if I'm ever going to use this word, but if anyone wanted to know what an axolotl is, there you go. That is the that is the word of the day. They're big babies, just like us. Yes, that is correct. They're big babies as well. All right, daily Palantir episode will be out in a few hours. I think it'll be a good one. The title will be Does Palantir Want War? So it's going to be an interesting deep dive. We'll be talking about that later today, and then 3:45 p.m. We'll be back for the market close and see what we've got going on. Last quick check on the markets. Palantir 2161, S&P 500 still green 503, SMCI up 1%, Nvidia down about 1%, Robin at 1702, MicroStrategy down 6%, ASML down about 6.84%, IWM 195, Palantir 2161, and then we got Bitcoin 61,773. So it's rebounding a little bit from that 61,200 level that we just saw, and then we got Palantir at 2162 on the day. All right, that's it. I'll see you guys at 3:45 p.m. Have a great Wednesday, and we'll be back in a few hours for the market close. Bye, everyone. Have a good one.